Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey everyone, welcome. Thanks guys for joining. Welcome everyone on Zoom. Thank you guys. Good evening to everybody. Guys, we're going to get back into this crazy markets. Today was an unbelievably volatile day. A lot of pips to be made, but if you couldn't manage risk, it could be a bad day in the markets. Okay guys, so please always, every single day, please try the best to trade with proper risk management. And we're going to do some analysis on gold tonight, see how everything is moving, and this will wrap up our week because tomorrow's Friday. Okay guys, so let's have a good session. We're going to get started in just a few moments, and let's have some fun tonight.
Hey guys, good morning. Welcome to the live session of Stocks Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure. Hey everyone, welcome to Stocks Numbers Trading. Thanks everyone for joining. My name is Ron, my partner is Dave. It is 6:24 p.m. Eastern, and it is Thursday, November the 13th. So thanks everyone. Hope everyone has had a great day so far, and we're going to get ourselves ready for the Tokyo/futures market. And we're going to be analyzing gold on this session. So for some of you guys, it's XAUUSD in the Forex side, and for some of you guys are trading futures on GC. So but we'll be watching price action, we'll be watching bodies of candles, and we're going to do a top-down analysis. So we're going to start off again on the daily, and then go down to the hourly, and then finally bring it down to the 5 minutes. Okay, so I hope everyone is having a great day, and hope everyone had some fun trading in the markets today. New York was absolutely insane across the board, with gold, with NASDAQ, with Dow Jones, with S&P 500. Unbelievable moves. Thank you, Tim. And here at SST, we are not financial advisors. We are here for education and entertainment purposes. And we hope everyone here trades with proper risk management, okay? The financial markets are not a casino, okay? So please trade with proper risk management, everyone. Thank you, Tim. I appreciate you. Okay, guys. So you can see we've got a little bit of a bullish move coming up, but there was a big sell right here from 1:30 p.m. this afternoon, and we also had some selling pressure coming at 8 a.m. going into COMEX and continuing to push down. So we're gonna do a nice analysis, guys. But before we get into it, I just want to say thank you to everyone again. Let's start off with some news. So we had some British news earlier in the day, and we continued to move into New York, where we had some FOMC speakers. Crude oil inventories came out. Crude oil is at some very low pricing right now. It could continue to drop even further down, but there is some good levels to maybe be looking at crude oil for some swing position buys. But right now, still no confirmations, as it could still drop even further. Okay, and we also had the 30-year bond auction today. When we got a lot of that volatility this afternoon was right after 1:30. Maybe the 30-year bond auction had a little bit of to do with something along those lines there. And tonight we have a lot of Chinese news. So if you're trading after 8:30 p.m. going into 9, if you're doing anything in the Asian markets, we got China over here. They will be releasing the unemployment rate in China, retail sales year over year. So if you're following the Chinese markets, which is you should be also not just following the US markets, we have to know what's going on the other side of the world, because US and China are basically, it's a tug of war of who's the bigger nation and who's the bigger bully and things like that. So I follow the Chinese markets. I don't necessarily am invested in the Chinese markets and trade. I do have some securities like Alibaba and things like that. But I'd like to follow the Shanghai markets as well. You can trade it absolutely just like we trade NASDAQ. You can trade the Chinese stock market as well, okay? And it makes some pretty good moves over there as well. So, pips are pips. Whether we make them in New York, we make them in Tokyo, we make them in the UK, pips are pips across the board, okay? And guys, we got an article here on why gold is rising on the government reopening. So you saw yesterday we had a pretty volatile session. That was all along the lines with the US having the vote and opening up the governments. So now you see kind of the reaction the following day, and it was pretty volatile. But there was a lot of pips to be made. But you got to kind of, trade with the trend as much as you can, reduce risk during a volatile market, and trade accordingly, okay? So we don't have much news coming out our session. It's just the futures could be volatile on market open, and we could get some moves. Right now, we got stock market getting clobbered as the shutdown fallout clouds the Fed outlook. So the Fed was in the news as well. The end of the U.S. shutdown was met by a concern from investors about the Fed's December rate plan. So we have an FOMC coming up in December, and now they're hinting that no more rate cuts. They were saying in the previous FOMCs, Powell was hinting that maybe further rate cuts are to come. That's what kind of got the stock market rallying to those all-time highs. And now they're kind of rewording it. Now it's no more cuts. Now we're going to be cautious. Now we might pause. Now there's a different tone. There's a different narrative now. So, and that's going right into the Santa Claus rally that we have in the end of December, finishing off this year. So we'll see, are we going to have a Santa Claus rally, or are we going to have a Grinch rally this year? Tesla stock sinks as post-Musk pay package sell-off continues. Tesla was down 7% today. So you saw today was a big red day on NASDAQ. There was a lot of bleeding going on in the markets today, which is not crazy, but it could be a pullback, and this could continue for some days and weeks to come with some bull pullbacks, with some, but you got to treat it just as if we got to go with what the trend is. If the trend starts changing and we enter a bear market, we have to be prepared, and we got to know how to trade bear markets. Some of you guys are not comfortable with trading a bear market. Some of you guys are really comfortable in a bull market. Now this is what I say. The real traders come out in bear markets. I'm not saying it's easy to trade a bull market, but it's rather what's the word here? A bull market is not as volatile with crazy whipsaw actions, because in a bear market you might see some huge red sell-off candles followed by some wicks going up and going back down, and then we get this whipsaw action. So it's a more volatile. Bear market is much more volatile than a bull market. So you have to be very, very disciplined with your trading in a bear market, and also increase on your education, okay, guys? Because this is where I see a lot of traders have difficulty from transitioning from a bull market to a bear market. So it's not easy, I'm telling you guys, because when a lot of traders see red, they get scared. They get scared to trade, right? So we can't be scared. We got to be confident at what we're doing, and we have to understand that price action dictates everything. So that's what we got to follow. And as long as we're doing a good top-down analysis and we figure out our points of control, our zones, and we're trading with the trend, we could be selling at premium areas in those big red boxes and let the buyers come to us, and we'll continue selling it down. Okay, so there's both ways in markets, how they move. Okay, so lots going on. Bitcoin sinking below 100,000. It could even drop even further. You know, there's a lot of gaps that Bitcoin left behind around 75, 80, 85,000, around there. I know people think it's crazy, but you know, Bitcoin, if you've been around Bitcoin, it's had 80, 90% retracements from the highs. So, you know, we hit 126,000 and now it's trading at like 97, 98. So it's not like a deep pullback, but it could go down further. You know, it might have some gaps to fill, okay? So crypto's in the markets right now, big red day. You can see Coinbase was down almost 7%. What else we got? Eric Trump right here, the future of finance is crypto, maybe because he's invested in billions of dollars there with his father. Could be why he's stating it's the future. You know, maybe they pulled the rug on everyone. You never know. Disney is down. Remember Disney earnings? They're down 8%. Their revenue was a disappointing. I don't even know who watches Disney anymore. I don't have it. My kids don't watch Disney. You know, I don't even know if anyone watches Disney these days. I have no idea. Okay, guys, and look at the markets. S&P 500 was down 1.66%. Dow 1.65. Look at NASDAQ leading the way. Tech was taking a big hit today. 2.3% negative. And gold was down a whole percent as well. Okay, so now we're going to see what's going on, guys. In our Discord over here, we sent out a few signals. This was the short on NASDAQ. We were looking for sells below nice psychological levels, 25,200. There's the push down, the first initial push, and look at how it came back up with that blue candle, and look at what it retested. Exactly the retest candle. If you drew like a little point of control of that candle, 50%, a little bit above, a little bit below, that would have came right into that point of control, and then you see the rejection. It went down a little lower, came back up, and then you see it lower high. They're keeping it down, big bear candle continuing, and then you see it comes right back up and then continuing to go down. So we've got lower highs, point of control respected, volume closed below, and continued to drop. So if some of the snipers were in that, congratulations. It ran for approximately 150 to 200 pips. We also sent out some signals on gold. Gold was this signal right here. See the double bottom right there? We were looking for that buy right there. Body closed above, and we had that next push up. But then you see, guys, it came back down, and then when it comes to retest, you see that bear candle that closed below, and then when it retested it, it further dropped down. This is now going into drawdown. If you didn't take out a little bit or go to a break even, now it goes to drawdown, comes back in. Again, it held again here, retested, but you see it couldn't pop these wicks, so then it's lower high, came back down, and you see the sellers continue to close it below the zone, push it down. Finally, like down there, it almost came down to the stop loss, but it came back up, and then you see lower highs, lower highs, lower highs. So you see like failed buyers, and then it continued push down, and then we came in, and then we were looking for an opposing sell at 4,187 to break the wicks here, and that's when we got it during 1:30 p.m. after the 30-year bond auction and some news in the markets, and then gold really sold off. And then you know, that's an impulse break as well, but if you go down to lower minutes, 3 minutes, 1 minute, you maybe see a body closing below in a retest and maybe have got in. Okay, but gold, you guys know, is very volatile. Okay, so it's hard to determine where it's going to go. You guys know how gold trades. It's not easy, but we try to help with trade ideas and trade signals for you guys. And we try our best over here at SST, okay? And thanks everyone for being on YouTube. I appreciate all of you guys, 150 viewers. Thanks everyone on Zoom. I appreciate all of you guys as well. Guys, on YouTube, there's a free blog available for you guys. It's this right here. This is gives you the links to our YouTube sessions. This was a blog that we just uploaded minutes ago prior to the session. It's all about trading in volatile markets. Just some handy tips for you guys because we may be heading into some volatile markets. So just please, if you have a chance, read this. We'll take 5 minutes out of your day, but you might see some helpful hints. Maybe you guys know all of the things in there, but it's just good for just helping you out, okay? And then we had our private New York session with Dave and the snipers, catching some moves in the New York AM sessions, okay, guys? And thanks, everyone. I appreciate all of the support. That Telegram is pinned at the top of the channel for you guys. And then finally, if you want to join the team here at Stock Sniper Trading and you want to become a sniper, we would love to have you on this team. There's a lot of education here, lots of courses by myself and Dave, courses, lots of webinars, boot camps. We just finished we got to do our third day this Sunday on the risk management boot camp. We finished the last 2 days last weekend, and now we're moving on to the day 3. And guys, here is the blogs all available for you guys. If you guys don't mind, if you guys can give me like 3 minutes, I just want to briefly go over this blog on volatility because it's very important, guys, because we might be going into a volatile next couple weeks. So I just want you guys to, I'll go over this with you guys. Okay. So trading during extremely volatile times in financial market requires a blend of strategy, discipline, and risk management. So you got to have all 3 of these, okay? You can't be lacking in this department. You can't just be a disciplined trader with no risk management, no strategy, okay? You got to have a little bit of everything here, okay? So first thing is understand what is volatility. What is it? Volatility refers to the degree of variations in trading prices over time. High volatility often signals uncertainty and can lead to significant price swings. We saw that last night in gold. It was making big moves. When you start to see these size candles get all this volume, you know that there's an extreme amount of volatility in the markets to create this type of price action on the lower time frames. So there's big moves, guys. There's a lot of big moves on all securities, not just gold. If you look at the size of the candles in the indices, they are big, guys. So you have to understand now risk management if you want to continue in trading for a long time, okay? Believe me. Otherwise, we're going to have losing days and we're going to blow up accounts. We should not be blowing up accounts on a losing day. You might lose 0.25%, 0.5%, or 1%, but that's a losing day. It's fine. I have those days. Everyone has those days, but you got to know how to handle those days, right? You got to handle them professionally. You can't panic. You can't be scared. It's not the end of the world. You got to know the market got you, okay? The market is tough. It's not easy to trade the markets on a daily basis. So you're going to have losing days, but you got to know how to handle it, okay? So number 1, we can use measurement tools like the VIX. If you guys don't know what VIX is, VIX, it's a volatility index. It's a chart. You can add it to your security watch list, and you'll see if add it right now. If you can add this, guys, it's just like searching another ticker, like you're trading XAUUSD. Put in stocks VIX, volatility index, and look at how it was today. Tell me, on a very bearish day in the markets, was VIX, was it bullish or bearish today? Okay. That's your homework for tonight. You guys let me know. And what it is a gauge for market expectations of near-term volatility and can serve as a barometer for current conditions. So like a barometer, like when they're testing the weather network and things like that. This is a barometer that can signal the volatility. Is the market very volatile or is it not volatile? When it's not volatile, then we have a bullish market. If it's very volatile, we could have a bearish market, okay? Number 2, risk management. We did 2 days, 3 days, full boot camp here. So I want to understand that risk management is very important, guys. Position sizing. Please understand this. Position sizing varies for everybody, okay? You can't compare yourself with other traders, right? You can only compare yourself with yourself. What position sizing can you handle when you go into a trade and you don't panic? You might go in 50 pips of drawdown, maybe 100 pips or more in drawdown. Is that going to destroy you, or are you going to be able to handle it? That's when you know you're trading with the proper position sizing. When you panic in drawdown, I can tell you right now, 100%, not 99.9, but 100%, you are over leveraged. Anytime you panic in a trade, you are over leveraged. When you get to the point where you're taking trades and you can handle drawdown professionally and you're not panicking, you know that you're managing your risk properly and you're not worried about losing because it's not going to destroy you as a trader. Okay, yes, it's a loss, but it will not destroy you. Okay, we're seeing too many every day. We're seeing retail traders like me and you, we see them getting destroyed, right? And I don't know why we're still getting destroyed. Destroyed means you're losing your entire capital in one day. Like, this boggles my mind. And this is not prop firms. This is traders trading with their own money, like $5,000. And they go max leverage and they take a couple losses and then they don't know how to stop. And then they revenge trade and then they message us and say, Ron, I lost all of my money in one trading session. It's unbelievable. If I deposited $5,000 in my account, that $5,000 should last me. I would need to lose 100 days in a row of 1% to lose that. So minimum 100 days. If you keep losing 1% per day, like it's astronomical how you can lose that amount of capital in one trading session. You are a gambler and you need to go see Gamblers Anonymous. You don't need to see Stock Sniper Trading. You need to go to a Gamblers Anonymous and seek some professional advice for gambling. Okay, we're not here to help with gambling. We're not gamblers ourselves. We trade with proper risk management on a daily basis, not just once a week. Every single day, every single session, every single candle we scalp is with proper risk management. Do you guys understand what I'm saying? It doesn't matter what type of trader you are, whether you're a scalper, you're an intraday trader, you're a swing trader, you're an investor. Every single trader needs to learn proper risk management. And even if you're scalping individual candles, that candle you're scalping, you got to use proper risk management. Okay, it's very, very serious, guys. And then when you start to understand this, then I'm telling you, your trading is it's gonna turn for the better. Okay, so position sizing: reduce the size of positions relative to your portfolio to limit potential losses. This is not just in a volatile market. This is in all markets, every single day, all day, every day. No matter what the market presents to us, you should always be trading with proper risk management. Stop loss orders. Use your stop loss orders to automatically exit trades if they move against you or beyond a predetermined point that you've already established, you've already measured, and you're okay with that, okay? I took a stop loss in yesterday's session and I was more than okay with it. I measured the move. I did lose. I went up on an L. You guys made fun of me on YouTube. I understand how the game works, okay? Everyone takes losses. I just do it live in front of everyone. I don't have nothing to hide, you know, and I show you my thought process going in the trade and exiting the trade. So I leave everything on the table. You know, I got nothing to hide. That's why I don't do like recap videos and things in that, because everything is shown live on every single session. You can just go watch all the videos. Diversification. Spread your investments across uncorrelated assets to mitigate risk. This is more if you're in the stock markets, you can diversify, right? We're not going to get into this tonight. Psychological preparedness, emotional discipline. Okay, a lot of us are lacking the emotional skills to continue to trade in these volatile markets. Please, guys, learn how to control your emotions. You have to, not just once a week. You got to know how to control your emotions every single day. You got to know how to control your emotions on winning days. You got to know how to control your emotions on losing days. You have to learn how to control your emotions, okay? You need to make this like this is your job. This is not for fun, okay? This is like how some of you guys earn your daily living, right? So let's not play games in these markets. If we want to go play games, we'll go to Las Vegas and we'll play as many games as you guys want. But when it comes to going into the markets, we mean business. This is where you got to get serious, okay? And when you take it serious, you're going to see your profit loss report acting real serious with you as well. If you don't take it serious, your profit loss will not be serious as well, okay? So emotional discipline. Maintain your composure when you're in a winning trade or when you're losing, okay? You have to maintain composure. If you've done everything according to your plan, you should be composed. There should be no surprises, right? Yes, once in a while, you're going to see some surprising candles. There, you might see a whipsaw candle. You might see a huge, crazy candle. I see that too when I'm trading, but it still doesn't make me go revenge trade when it happen. I get mad just like you, but I remain composed. And avoid emotional decision making. Anytime you lose a trade, don't just trade right next trade just because you're on emotions, because you're pissed off. We're all pissed off when we trade. Believe me, I was pissed off last night when I took a couple losses. I was pissed off last night where I was in profit and I never went break even. I was pissed off about that. I was pissed off when I recovered on my third trade and I didn't take out any profit. I was just pissed off. But I came back stronger earlier today, and I made some smart moves, right? But panic selling or buying can exaggerate losses, okay? We don't do that. No more. Stop doing this, guys. Please, I'm telling you. Predefined plans. Have something in mind. Enter volatile markets with a clear strategy and stick to it. If we know the markets are going to be volatile, if we know gold is going to be volatile tonight, we have to have a clear strategy when we're trading it tonight. You'll see when I do my top-down analysis what type of strategy I'm going to use tonight, okay? And you'll see something different from what I normally do. Adaptation should be based on rational analysis, not impulse. You guys know that, okay? Anytime we're going in on impulse, go on a small little feeler trade, test out the market. If it fakes you out, okay, we'll give it back to the market, no problem. Small loss, but we learn from it and we know that we made a critical error. It's fine, but we didn't blow our entire accounts, okay? Strategy adaptation. Short-term trading, there's options trading and trend following. You guys know, follow the trend as much as you can until the end, okay? We're not going to go on options and short-term trading. Indicators, you guys can use Bollinger Bands. It's a volatility indicator. Can help you with volatility if you understand how that works. It expands when the markets get volatile and it contracts when it's not getting volatile. You guys know your chart patterns, head and shoulders, double bottoms, double tops, things like that. Fundamental analysis, economic indicators. We had some news today, 30-year auction, bond auction. We got maybe some pause in interest rates in the United States coming in December. Anything like this, economic folders can cause volatility in the markets. And then continuous learning, guys, post-mortem analysis, okay? After volatile periods, analyze what worked and what didn't work to improve future performance, okay? You can look back at previous volatile markets in the past. I can tell you guys each year which year was more volatile than not, and then go see how your security was trading. That's what backtesting is. Go see how gold was trading in 2008 and 9. Go see how crude oil was trading in 2022 when Russia launched the first missile in Ukraine on February 24, 2022. That's when crude oil hit the all-time highs of $130, $140 a barrel. Okay, so go look at volatile times and it will show you exactly what you need to know. Okay, and then finally, professional advice. We're not your financial advisors. You need to consult your institutional advisors at the banks. When uncertain, seek advice from financial advisors or professionals with expertise in navigating volatile markets. And guys, so that is a little bit of a volatility blog. There's lots of blogs available for everybody here. And finally, guys, if you guys can hit the like button, subscribe to the channel. I promise you, you're going to learn something new tonight. You're going to learn something every single day if you tune in with us. And it's for the better. It's going to improve you, and you're going to become that much better of a trader every single day. But it takes hard work. So I know a lot of you guys are committed. I know a lot of you guys are hungry. I know a lot of you guys are sacrificing long hours in the markets. You're sacrificing your sleep right now. I know for some of you guys it's 2, 3, 4, 5 a.m. and you should be sleeping right now, and you guys are on the charts with me. So I have mad respect for all of you guys. I know how it is to put those late night hours in. I know it, guys. I do this. I've done it most of my life. So I know, guys, but I'm telling you, if you trade smart, financially, the market will reward you, okay? This is not everybody. I want to be honest here. Not everyone's going to get rewarded by these markets. Some of you guys are going to get destroyed by these markets. I'm going to be honest. Some of you guys are going to quit trading after you do this for a couple of years because it's not for you. It's not for everybody. I tell all my friends. All my friends every day say, "Ron, can you teach me how to trade? I say this is not for you. You got to be a different mindset in order to trade every single day in these crazy markets. So if you guys are staying committed and you guys are seeing progress on your accounts and you guys are doing really well, I just want to say congratulations to everyone. It's not easy this day and age and these crazy markets to even be profitable. And if you guys are very consistent at doing it, respect to you guys, okay? And we're here supporting you guys along the way. If you need help from us, that's why we're here, okay? We're on your team. We're all one team together, everybody here. Zoom, Discord, YouTube, everyone. We're all united traders, you know what I mean? We got to work hard at this together, okay? Now, guys, we're going to get into gold, okay? I'm going to do a full top down, and we'll get right into it. So it's 6:50, so I'll get it done in about 10 minutes, and then we'll watch how everything is moving, okay? Right now, we're still just climbing up. It's making a higher high, higher low, higher high, higher low, higher high. We'll see how high it can get, maybe in here. Maybe there we'll see some selling pressure. Maybe we'll have a breakout, and we'll monitor it together, guys. We'll work together tonight, okay? And finally, thank you everyone on Zoom for joining. Welcome. Sergio, thank you for joining, brother. Justin, thank you for joining. Christoph, welcome. Rob, Milan, welcome. Sergio, thank you for joining. Tim, welcome. Thank you. Thank you for reminding me, Tim. Bridge, welcome. Thank you, guys. Okay, and everyone on YouTube as well. All of you guys, thank you. Mohammed, thank you for joining, Habibi. I appreciate you. Jay Lavish, thank you for joining again. Zeus, love all the way from Afghanistan. Wow, you see, like we're reaching other parts of the world. Look at, we're touching Afghanistan. This is all because of you guys. By hitting the like button and subscribing, it allows us on YouTube to reach all parts of the world. That was our mission from day one. We want to teach everyone a financial education for free on YouTube for everybody around the world, even if you're living in Afghanistan, okay? So thank you, Zeus, for joining. I appreciate you. Dustin, welcome. Daniela, thank you. Peter, welcome. Jay Violet, thank you for joining. I appreciate all of you guys. Cash, thank you. Guys, shout outs to Cash. He's always on here, you know, not all the time, but he buys me a coffee and I do appreciate it. Cash, and I want to do some for you because I do appreciate you and you're the only one that buys me a coffee. So if you can you add me on my Instagram, SniperRonnie_FX, and I'm going to do a 1 or 2 hour Zoom session with just me and you. You can ask me anything. I'll help you out with anything you need in trading, okay? And we'll have a good conversation, me and you. I appreciate you. So Cash, if you're listening, that's add me on the Instagram and our Stock Sniper Trading Instagram and message me. Thank you, bro. I appreciate you. And I look to give more to everybody. I appreciate all of you guys. Okay, so let's get into this now. Let's start off on the daily. Okay, so let's focus now. We're gonna start right now with gold. Okay, so look at it now. This is how it looks on the daily. So do you guys recognize a little bit of a pattern right now? Do you guys see something? Like when I show you this chart, does this look complicated to you, or do you guys understand what's going on right now? Because if you do, you'll probably see this on a 4 hour. You'll probably see this on a 1 hour. You'll probably see this on a 15 minute. You might see this on a 5 minute. It's a very similar pattern, okay? So we've got the big bull trend, right? All-time high. There was a pullback. It came down. Double bottom right here. So I told you that was a significant because didn't allow the sellers to continue to push down. So double bottom. And then we had the big breakout. And look at where we're pushing into. Remember what I said, guys? Keep an eye on that big point of control of that big bearish candle. Have we traded into it yet? It's very close, you know, so we're going to dissect everything. But, you know, if it still wants to continue to run, all-time high, will it break for a new all-time high? Will it be a double top? Will it start drawing? All of these things. Make sure you recognize patterns, okay? Do they always work out? No. But at least when you recognize them, you know what you're looking for every single day. Okay? Okay, so we're going to start off on the daily. Is everyone here? Okay, I feel like no one is responding to me. Did anything freeze? Zoom? Okay, you guys are here. You guys are really quiet. Okay, guys, first thing, we've got the all-time high. Let's recognize where it is. Let's put a line there, okay? That's our all-time high. I'm going to go a little quicker today, but what we're going to do is we're going to find our all-time high zone. You guys know how I do this. We do it every single call at the start of every call. If you tune in, you guys know. That's the all-time high zone. We stretch it into the future, okay? Now, we can clearly see we have a zone below us. It's already been formed. You know, 50% of that big bullish candle. Here's kind of our big supporting zone on the daily. Okay, these are each individual candlesticks that never broke. There was the double bottom, stretch into the future. Now you see the zone we're in. We're in this. Do we need to worry about all of this down here? No, not right now. What we got to do is we got to focus on what's going on in here. So you see I'm just in between the big all-time high supply. We bounced off here. This is where we're trading at right now. So this was a significant bearish candle right here. October 21. Grab your Fibonacci tool, go from the opening price and go down to the closing price. Okay, go to 50% right there, 0.5. Everybody should have, if you're matching the numbers and chart with me, 4,240 on this chart, FXCM on TradingView. If you're in the futures, you will have a different number, but I'm sure you can still identify this daily candle and cut it in half, okay? You should be able to do that. And then we're going to find our zone. It's the Fibonacci, 382618, right there. And then we're going to make it red because that was a big bearish candle that closed below, and we're stretching into the future. Look at yesterday, okay? It came right in there, tapped in, and you guys now see the results, okay? And I've been telling you guys to do this. How many of you guys sold that wick? And I know there's going to be at least one person on this call that told me, Ron, I sniped that wick, okay? There should be, because if there isn't, then I'm failing at what I'm doing. I honestly am. Then I don't know why I'm here anymore. Because if nobody sniped that wick in this group, out of all of you guys, there's 230 on YouTube and a few of you guys on Zoom. If nobody identified, maybe I shouldn't say snipe, maybe that's too much. But if anybody, put that as a point of interest, and when it came up there and broke 4,245 to 250, there it is. There's the evidence left behind, okay? And now, let's look at the results, okay? You can see it got rejected, and it came down, and it came back and closed inside. So right now, look at the volume. We're kind of flagging. It could continue today and go right back in here. Look at it. It's already open, bullish ignited, and wants to continue to fill, but that's a big wick left behind. It's not one of the, this wick right here. It's not a short one. It's a rather tall wick. So we got to continue to fill, and to fill that wick, then you're coming into upper supply up here. So you see the all-time high sellers, they're not playing games. They rejected that move yesterday, okay? We can see it right now. Now we got to just continue going down, okay? See right here? We've got some bodies of interest right here. I'm going to place a yellow line now, right here. Body close, body open. Body close, body open. There was an impulse, body close at the yellow line. There was a body open at the yellow line, came down, continued to drive. 4,127, make it 4,125. Everyone place an alert at this line, okay? Like what I'm doing. Right click, alert, created. Whether it comes down here tomorrow, next week, next month, or 5 years from now, when it comes down there, you're going to get an alert. And it's alerting you that this could be a supporting area, okay? And then we could see a move like this. However, it will alert us if the sellers are breaking it down. They might fill those two wicks, create another lower low, and look at where it's trading right into. 50% of that bull candle. If I were you guys, I would already make a zone in there, because if it comes in there, that's where we could get that bounce coming right back up. Then it's testing this same area. If it breaks back above, you guys know the rules. If it gets rejected there, you guys know the rules. I don't need to continue to break this down. You guys should know this shit inside and out, okay? So I can continue to dissect down here, but I'm not going to do that right now. That's more for like a weekend analysis. Right now, we got to focus on what's going on in here. So we got this big bull candle, came up. Let's see, what date was it? Wednesday. Big push up, got rejected, closed right there. Do we have a closing and opening price? Yes. Where? Right there. Wednesday's close, Thursday's open. Okay, so there was that market we were trading yesterday. Okay, it was crazy volatile yesterday, and it moved bullish. Look, it came up, took out that high, 4,195, 196. Remember, I went in a buy there, and it couldn't break it out, but then later on it broke it out, and that was that squeeze through there. I was hoping I would get it in the futures market, and that's where the market faked me out, and it took a couple hours later. So you can see how markets work. I was anticipating that breakout right at futures market. I thought it had enough breakout volume, and they shut it down. And then they released it after, okay? But then when they released it, came up, right there. That was the highest point, right in that, 50% right there. And then they rejected it back down. Remember the fight at that opening balance at that 4,195, 196 area all night last night. And then look at when they flipped the candle, they flipped it and they really pushed it down right into there. Okay, so that's the lowest point of yesterday. Let's highlight it with a yellow line, 4,145. And it came right back up. So you still see it's holding this body of volume. It's still got those higher lows, equal bottom lows there, and it's still got majority, 50% point of control of that big body candle, okay? So it came back up and closed right there. Do we have a closing and opening balance right now? Yes. Closing, opening. Right now, again, we opened another daily candle. Again, right now, this candle just opened a couple hours ago. It's bullish ignited. It's filling. So this right now, this opening balance is a purple line. This is our opening balance. It's our lowest point of the day. There is absolutely no wick on this candle. So you see it's bullish ignited. It could be like a 5-minute candle. You know when I say it comes down and it could refuel itself and continue to drive up. And then you see where our highest point is right now. Right now with our analysis. It's right there. So that's our range. Do you guys see a pattern? Like if I was to trap all this volume, if this was a 5-minute setup, I would say, guys, let's trap all this shitty volume. And we've got a bullish candle, a bearish candle, another bullish one. Is it going to come all the way back up and retest this point of interest, 4,195? That's about $10 move from now. That's 100 pips. If we just break from this purple line and come right up to this yellow line, that could be our daily goal and we're done Tokyo session. But if it continues to break out of here, then we got a wick to fill and a wick to fill. Look at where this wick is relative to where the red zone is. Let's have a yellow line right here, right at the red box. Okay, right there. You could have it a little lower if you want, or right at the box there, okay? And that would be another fill. If it comes back up, blue, it could come right up there, and then the sellers are there rejecting it right back down. But if that comes from yellow line 195 to 215, that's a $20 move. That's 200 additional pips from yellow to yellow. If we continue to drive up that wick, we could measure that wick, okay? But the sellers could now come in again and continue to push this blue volume down. If we flip the daily candle, there's no wick, so we will literally create the wick tonight, and it could be create a wick and then it could come right back up, right? But if we get a complete wick fill, it could flip and fill all of yesterday's wick down to there. So what I do now is from the purple to the yellow, I cut it in half, exactly 50%. Why do I do this? No one's ever asked me, in all these 6 years. I looked back last night and I was thinking to myself, why has nobody ever asked me, why do I cut that area? And then I thought about it and I'm like, do you guys even know why I cut that area or no? Guys, like I told you, it's all self-taught. So, but I'm thinking that you guys know these things, okay? The reason why I'm cutting that right there is that exact narrative, what I just said. If we flip this candle and it turns black, it might stop right there and get a wick. That's like the point of control from this purple line to that yellow line. That's the 50%, a little bit above, a little bit below. Then if it catches a wick here and goes back up, then I know that whoever bought this wick right here is protecting their position because they're not allowing it to come down where they entered. You know, when I enter a trade where sometimes I allow it to come down there because I like a higher low wick, I might add another position at a higher low to protect my position. I'm a nobody. We're nobodies in the market. But think about institutions that are doing this, the market makers that are doing this. They're protecting their position. Like whoever's selling the all-time high of gold is literally protecting their position. That's where they sold it down. And then you see right here, the point of control, that's the all-time high sellers protecting their position right there. They're not that yesterday bulls could have broke it right back up there. But those all-time high sellers are lowering their offers right there and adding another position in the market. That's what a lower high is. And it's at this exact critical area that we always talk about every single day. So that's why you got to learn these points of control on all time frames. Okay. So we got this inside candle. This is our consolidated zone on the daily. If we just bounce around, like if it comes just up, guys, this is a huge zone. That's a 25 $5 move like on gold. That's 250 pips right there, right? Just to fill blue, come back down. If it just bounces around here. And this is also a bull flag, but it's a bull flag that already kind of got rejected yesterday, and we still have the big massive downtrend. So if the sellers keep pushing this down, this is where now we could maybe possibly see the lag coming down, like where it came up, all-time high, double bottom there where it didn't break. So second leg has traditionally more volume. We got good volume, but there's where they pinned it, and now we're inside here. So this could literally flip in the tomorrow, next week, and we could start riding gold back down into here, maybe come all the way down there, and then you guys know the drill when it gets down there. Will it break that? Will it, and we go through, or will it come there and go right back up? But we're at a critical area, okay? It's not just by chance why it's here, and we're going into a Friday. Governments just opened up. It's all factored in. Okay, so there's our daily. Now, I'm just gonna go into the 4 hour, just review. I'm not gonna put any lines on the 4 hour. I don't want to confuse anybody. This is our big 4 hour. Okay, so we had the big double top drop, came back up slowly, closed above. We had this next leg up, which closed above this 4 hour resistance. We had a nice little pop yesterday. There's where the candle, 6 a.m. kind of New York, kind of just boomed right there, and then we started dropping down. Here's the next drop down, and now we're coming right back up slowly, okay? So when we see where did all this volume come from, there was Europe last night. This was 6 a.m. to 10 a.m., which represents pre-New York. It represents COMEX. It represents a little bit of Wall Street. There was gold's drop. It came back up. Where did it retest? This is 4 hour review for all my 4 hour traders right here. Did you cut this 4 hour candle in half? Please tell me everybody on this call says yes. Even if you're lying to me, just say yes. Even if you didn't, just say yes to make me happy. Did anybody do this? Okay. And if you're a 4 hour trader, I have no idea why you're not doing this. Okay. This is where it boggles my mind again. Opening price, closing price. That's a 4 hour candle. If I'm a 4 hour trader, I am doing the exact same shit, okay? And I'm telling you, I'm not a 4 hour trader. I would cut it in half. Where's the halfway point? Is it, I'll use a white line to show you. Is that not the halfway point? Blue, 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 hit the white line exactly and rejected down. Someone could have sniped that entry right there. If you waited there with a pending order. How many of you guys just open up a demo account? Listen to what I'm saying. Listen to what Uncle's saying. Sometimes Uncle offers some good advice. Once in a while, not always. Open up a demo account. So we're not losing any money. Demo, we can't lose money. Just use it for educational purposes only. Okay? Listen to what Uncle is saying. Open it up and just test pending orders at these points of control. And then you guys tell me the results next week, okay? That will be our review. There's your homework for this, a homework assignment this weekend, okay? And then you see the results there. Does that always happen? No, but it's pretty respectable right there, okay? And then it retested, filled the wick, dropped all the way down there, came back up. Now we came back down. Equal bottom lows. Equal bottom lows, tweezer bottom lows. They did not allow it to break any further down. They're right there. There's another, I told you guys, you're going to learn something every single call. There it came back up, pushed in, where approximately 50% of that bearish candle, maybe the point of control, a little bit above, a little bit below. And then the sellers were there, rejecting it back down. Look at this 4 hour candle right now. This is the daily candle open. Bullish ignited, has already filled the wick and popped a little further. But we still have this point of interest right here. We still have that point of interest. See how these yellow lines are corresponding with our 4 hour, okay? So now we get off the 4 hour. What we do is we just look at the overall trend. It's still bullish. It came up, but they've dropped it down. Now we're coming right back up. Will it come back up a little higher, or they're going to start dropping this leg coming down, okay? That's what we got to be watching for. Now, let's go into the 1 hour, okay? So we're in the 1 hour now. Anything going on in the 1 hour? We had this big push, massive push, 10 a.m. Push, higher high, pulled back, higher low. Drove all the way up there. Now I can see 7 a.m., 8 a.m. was the big drop. 9 a.m., big drop. Anybody figure out, cut that hourly candle in half? If you did, Now you can see we did not trade into it so far. Okay, there's open close. This is a 1 hour bar. Doing the same thing. There's the white line. See how the white line on the hourly at 9 a.m. is right at the bottom of our red daily zone, and it's right there at this point. We did come back up, but you see it missed it by a hair. Like, look, what is it? 211 up to there is 213 by $2. 20 pips, it missed testing in there. So they pushed it down and then continue push down. So sometimes you're going to miss a move. It happens to me all the time. Sometimes I've got an order sitting there on 5 minutes. It does this and it misses me by 5 pips. And then I watch a huge candle go down. I'm sick in my stomach when I see that. But I got to know. I'll get it next time. No worries. I'll get it next time. There's always another trade. As long as you're patient and you're disciplined. Okay? Now, what's going on the hourly? It came back up and then they flushed it again at 1 p.m. That was the 30-year bond auction. Again, can we now, if you want to do any hourly analysis, we could cut that candle in half and know where we are right now. So right now on the hourly, let's cut that one. Cut it down, right? Right there. I'm going to add one white line just to show you where we're at. Right there was 50%. See, it tapped right into it at the close and came back down. Inverted hammer, came back up. Right now, market open. So look now. Look, guys, on the hourly. Okay, I'll get rid of this. You see how it was resistance there. And then the hourly candle came up. Blue volume closed above. Confirmed it closed above the white line. Look at this hour. Just came down. Look, it just came down. Bearish. Black, 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 black. And look at what it just wicked off. Okay? Are we saying that this is just luck or by chance? No. Look at it. The wick is right exactly at 50% of this candle. And now they're flipping it and possibly going to fill. And then we could be driving, back up to this location. Okay. And then maybe we'll see what's going on in there. Okay. So it looks like it wants to continue to break out to the upside. However, they could, do a fake move and bring this shit down. Okay. So this is where we're trading at right now. Now, let's go on to the 5 minutes. What's the overall 5-minute trend? We had this big bullish move. It came up. They continued higher highs, higher lows. And then look at there. At the daily kind of stopped. There's that liquidity grab fake out. And then they started dropping the market back down. See how many times it came down here? Back up. Double bottom. There it was, with the bigger volume, but didn't really, do anything. Came up and then kind of consolidated. Then they flushed it down. So this is like a bear flag below here. So then they flushed it. That's the redistribution of volume. Now buy side volume is bringing it right back up. Look at it. It made a double bottom, came up. That's a higher high, kind of higher low, new higher high, new higher low, and we've got a new higher high that's trying. Look at how many attempts right now these 5-minute candles have tried to break this purple line. Just tapped right in there, rejected back down. Came up again, right there, back down. So we're barcoding blue, black. Then that was a really black candle that came all the way down and back up, and now we're testing again. So we're in a 5-minute bull flag right now at the highest point of the day, and look at where the volume is maintaining. Above 50% of this big blue candle. If you don't believe me, grab your Fibonacci tool, go from the opening balance to the closing balance. Where's 50% of that candle? Let's cut it in half with this red line right there. There's our cut line. And look, the volume is still above that. So we're still currently above 50% of that point of control. Bull flags have a high probability of breaking up to the upside. Okay, so if it breaks to the upside, there's kind of like a body to body, but we'll maybe get that fill up to there. Okay, so, but we got to watch out for this move. Okay, this move. It's already falling down. It came back up, lower high. There was where they dropped it. Now it's coming right back up. Okay, so could they do this move where they drop this shit down? Could they let it advance just a little higher? Maybe fake out some buyers up there and then they drop it down? That's a possibility. Or could we continue to move up bullish? That's a possibility as well. But right now, look at how it's barcoding in here. And then we are in right now a bullish parallel channel. Okay, so if we channel in all of this right here, from here to there. This is our bull channel we're in. I'll make it red to kind of represent this is a 5-minute channel. Okay, do you guys see what I just did there? Bull channel. Came up, there's the channel, back down, bottom of the channel. Came back up to the top of the channel, back down almost to the bottom of the channel. Kind of consolidated at the dotted line. Do you guys know what the dotted line is in the parallel channel? It represents 50%. You know, this is a psychological dotted line. From this point to this point, it's kind of like the Fibonacci. It's kind of like cutting it in half. Okay, and then you can see if we're below the dotted line, it's technically bearish, that it could continue to come down to the lower part of the channel. If the volume is above the dotted line, it's got a high probability it will come back up and touch the top of the channel. We may continue to go in this motion, okay? But they could also, you know, this could be one of those, you know, rising flags, and then they just continue to drop it down. Like this one right here, higher high, higher low, higher high, higher low is coming up, and then boom, they just elevator it coming down. So that's what they could do to us as well. So, you know, we got to be ready. Now, you see tonight, guys, I'm going to be focusing on higher time frames, okay? More so where these kind of yellow lines are. I just want to fix this zone. Get rid of that. There is a yellow line here. I think I have an hourly zone. There it is, okay? So I kind of want to focus on the yellow lines tonight, see what type of maybe price action we get either at the purple low, maybe at this daily point of interest, you know, and then we can kind of see how it is in the past, how it's been trading, okay? So this is gold right now. I'm just going to add the daily bar indicator beside us so we know what to refer back to the daily candle, what we're looking at. So you know it's a big, bullish, strong, ignited candle, continuing to fill, and we're at the highest point of the day. So it's got a high probability it could, you know, just break out, continue to the upside, okay? This is where we got to kind of either watch if there's going to be kind of fake out or if it's really going to continue to push, okay? And then if we need to add these EMAs, we can add an EMA 9. We're still above the EMA 9, this green line. And if we need that EMA 200, it's this purple line. It's like a cloud above us. See, like over here, we're kind of traded below it. Look at what it kind of traded into, the purple line, back down. You know, I'm not too big a fan of indicators, but when we look already, we have no 5-minute volume closing above that purple line as of yet. It's acting as resistance, like a cloud above us. So that cloud is right there, right below the daily point of interest. So we got to watch that in case there's breakouts up to there. If you are in a buy and it does break out, or you're taking a breakout trade, right? There's breakout traders. I'm a breakout trader, but I know when I take it exactly what I'm looking for, okay? Because again, it could break out, could come right up to that purple line and you're up 50 pips, come right up there and get a wick and go right back down. Okay, it's happened to me a million times on these live sessions with you guys. You guys know it. So if you're a breakout trader, that's more than enough for you. You're getting your 50 and then maximum up to that yellow line, 85 pips. If you're not at a break even, I don't know what you're doing. Honestly, I don't know what you're doing. If you're a breakout trader and that's your strategy, I have no idea what you're looking for. You're not going to take a breakout trade. It's not going to go 700 pips. It's not, unless there's something catastrophic going on in the world that maybe we don't know about. But if you get 30, 50, 70, 85 pips, should have no stop loss in the market. You should be at break even and you should be scaling out. Right now, you see how that's breaking out? That's the easiest scalp you could possibly make in your life. Like, look at how it's a bull flag breaking out. They grab that liquidity with that wick. Even that breakout right there. You know, if you're a 1 minute trader, that's 30 pips. There's your 1 minute trade right there. Right there. Like, you see how it's kind of building, came up, they rejected it, it retapped it, came down. There's the liquidity grab below that 5 minute structure. It passed up right there, big bear, and look at that big engulfing candle. There's ignited, no wicks, there's your pop. You could even now cut this 1 minute candle in half, and you could continue to do the same shit we were just doing. Okay, you measure the size of the wick, is it continuing to fill, gonna pop? Okay, if you're waiting for a 1 minute pullback, you gotta either wait in the point of control of that 1 minute candle, or better area is the actual retest area. Have we retested this purple line yet? No. This is now a breakout trade, breaking out. It has not technically came back to even retest this resistance, resistance. This is the first breakout candle. Hasn't even, so right now as I'm speaking, the market is populating in here. It's getting orders. It's getting pending orders. Some breakout traders have missed this move. So they're positioning themselves to buy right here. Maybe they're positioning themselves to buy down in here. Maybe they're positioning themselves to buy back down in here. But you see the depth of market is accumulating all type of positions. So if you want to be patient, let's just, for education tonight, let's see what will happen when it comes right down into this location, okay? I'm going to go back to the 5 minutes. And what time is it? 7:20, okay? So the market is starting to move, and we got the futures market opening up at 8 in 40 minutes at 8:20. Do you guys have any questions about anything? We're still moving up. We're still in this parallel channel. Still pushing up. There's that 200 EMA. There's that daily point of interest. 4,195. Wasn't this the exact same number we were having difficulty with yesterday? Right? 4,195. There it was. There was my trade right there. Where I came in. You know, I saw that big wick. I was looking for that breakout. And you see how they rejected it back down, and then it built its way back up, and then look at where it finally closed above short wick. Then there was the move, right? So it kind of got me on that leg. I was in, but then the second leg accumulates more volume, and there's the breakout, right? I was hoping for that on that, right when the futures market opened up. You see where the market got me? It happens, okay? Okay, now, is anyone in a trade right now? I'm going to look at my spreads. I'm not in a trade right now. Is anyone in a buy right now? Is anyone in a sell? Is anyone on the sidelines? Is anyone considering a position? Everyone should at least be doing something. Someone could be not in a trade. Someone could be in a buy. Someone could be in a sell. Someone could be thinking about what they're going to do. See, a lot of you guys are no trade. Sidelines considering. Okay. Okay, so now let's watch this 5-minute candle. Remember this? Okay, so it broke out, came up, now it's coming down. So if you ever has anyone on this call ever waited for a candle to close and then caught a retest at the same location right there? Has anyone ever taken a trade like that? Yes, I have. That's called a breakout with a retest. We call it like a confirmation with a retest. So one thing that we can check off is, did the volume close above this purple line? The answer is yes. Now, has any volume came back to retest this purple line? Now, yes. We can say yes. Now it's retesting it, okay? So technically, we should see a wick here. We should see some sort of buyers now buying the retest, okay? And then I look at 45 seconds to go on the candle. So it's coming close to the close. So let's see who wins the close of this candle. Look at, so we got an official retest. Mo, what's up? We have a signal, sell signal. Where? Where at? You know, I'll look. 1 second, guys. This came out 4172. 4172. Okay, I'll put it on our charts. 4172. 4172. Okay, oh, near the lowest point of the day. Okay, we'll keep an eye on that. Okay, now, just going over this, guys, okay? So if you're learning now, you're getting a top-tier education right now. Did it retest that? Yes, it did. Remember, it got a wick and it came back up. But what was the closing volume? Who won that candle? Who won the candle? Buyers or sellers? You think it's the sellers? Okay, well, sellers not 100% because they didn't engulf. They didn't close below that opening price. So you see they were just shy by a little bit, okay? But I give them the probability that they were in control of that candle because they also closed it below the rejection area. Now, look at the next candle, opening bullish ignited. So don't you guys like wonder, ask yourself, all of this bearish volume, how it closed right there, how did it not just open bearish a little bit and just continue come down just a little bit, right? So you see how the market said just right away, this candle opened strong, bullish ignited. Look at it coming up, and where's it trading into? It's trading into approximately 50% of that bearish candle, right? I'm guessing that that's 50%. I don't need to guess because Leonardo Fibonacci created this amazing mathematical tool that you can figure out exactly 50% by doing that. And then you could also figure out the point of control of that candle, like that. Didn't we do this on the daily? Didn't we do this on the 4 hour? Didn't we do this on the hourly? Why are we not doing it on the 5 minutes, right? So now you see those big buyers, they bought right into there. There's the point of control. Sellers are there. They're showing us they're there by rejecting this volume down, okay? Who do you think is winning now? Sellers are currently winning. We can tell by the retest. Okay, those were strong buyers at the opening, and then now they've rejected it. But this little bit of volume that's still left in this ignited candle, all of these opening buyers could continue buy, and then now you see sellers rejected the opening price, and now you have your shooting star candle. So there's your retest. That was a bearish candle. It closed below the point of interest. So those sellers engulfed all of those pending buyers. Then the buyers came in, and then you see how they got rejected and then pushed back down. Okay. Now this looks like a fake out of the highest point of the day, the purple line. That's a fake out. Okay. Now they're bringing it right back down, but we're still kind of trading in this kind of consolidated area where it was blue, black. That was a big bearish candle that came right back in. That went blue, came back down black, got the retest, broke out, fake out. Now we're right back inside here. Okay. Have you guys ever analyzed trading like this before? Have you guys ever done this? Be honest with me. I do this on a daily basis. Do you guys do this? You don't have to literally be trading, but you could be studying the candles. This is how you study. This is how you learn. This is how I learned how to do this. I didn't learn this by watching a YouTube channel and someone taught me. I learned by watching the candles every single day. I used to see that. Why would they come up right in there and then get rejected back down? Then they come into like a bullish point of control of another candle, and then it went right back up. Then kind of like alarm bells were singing in my ears saying, Ron, continue watching this. What else is going on? What else do you see? Right? So sometimes just watching. Now look, it came back down and then it got a wick. Buyers are coming up. Higher, low, higher, low. Buyers are coming right back up. And then now we got some blue volume come back in. Now you see how the candle is dancing? That's volatility. See how the candle now is going up and down, up and down? It's not as clean as this one. Now it's getting volatile. I can tell that maybe we're going into 7:30, a new 30-minute candle. That's why this candle is dancing like this, because we've got a new higher time frame 30-minute bar that's going to open up in 37 seconds. So if we look at the 30-minute trend, the 30-minute trend is making higher highs, higher low, higher highs, higher low, higher high, higher low, higher high, higher low, a new higher high and higher low. So if we get 30-minute volume now, let's see if the 30-minute volume is going to close above the purple line. Then what we can say is we can confirm that 30-minute volume has in fact closed above the previous high. So if we're buying, you got 30-minute support behind you, okay? Do you guys understand what I mean? This is not just a 5-minute candle. There now we confirm that 30-minute volume has in fact closed above 4,186, that purple line, okay? So if we look at it on the 5-minute, look at now how it's kind of, again, barcoding. Bullish, bearish, bullish. Buyers brought it right back up. That point of control now, with that blue volume closing above, you flip it green. Now you see we've got this point of control. This is the same zone that's still continuing to hold. So now you got a continued bullish move that will fill this wick possibly and travel right up to that 200 EMA that we were talking about. Okay. So far, buyers are strong. You see, sellers were strong. They had strength at that point, but they couldn't continue to close below down here because it just triggered buyers to come in at a lower point. That's higher low, you know. Buyers are getting at a better discounted price. There was, remember that wick that bounced off that purple line? Those were buyers, but you see, when it came down here, it got bigger buyers. Now again, look how it came back up. That didn't take out that high, so sellers are still here, and now they're bringing it right back down. So you see this is barcoding volume. This is where we went from this barcoding, now we're kind of barcoding right here now. Right there, there's the zone. Right in here. Now the sellers are bringing it right back down, okay? So now we're back down. This candle is representing the first 5 minutes of the new 30-minute candle. Was that 30-minute candle a fake out now? You see how that 30-minute candle closed above, the next one opened, didn't create the high, and now it's coming back down black. So maybe we got to wait for the first 5-minute candle to show us, can these sellers close it below here? Maybe we'll continue pushing down, or will the buyers hold it back up here, and then the 30-minute candle is building up again? Look at how it came down, caught a wick, ready to possibly flip to the upside again. I know it's a lot to watch, right? Sometimes when the market's trading, like my eyes are hurting looking at this. It hurts my eyes looking at this, you know. But we can't change the volume. This is how the volume is trading right now. All we can do is pick a side, trade it, and hopefully we're using proper risk management. Okay, now does any of this maybe, remember I asked you guys, the people that are on the sidelines, now do you have any other confirmation? Are you leaning towards one side now with what you see, or no, nothing has changed? Or you still maybe, you don't have enough to change your mind or to sway whether you're thinking bullish or bearish, or you're just still neutral? Nothing? I don't really see anything either, to tell you the truth. I see, yeah, there's buyers, there's sellers, okay? We can maybe possibly entertain a trade, but we could get faked out, and you know, is the risk to reward there? Do we have trending volume? No, okay? So this is where I say use a feeler trade. Use something if you're testing out right now. If you want to test out a buy, go something small, tiny, where you're not even looking at your profit loss, just so you can get emotionally involved. That's if you want, or sell, right? You don't got to go all in. We don't have too much confirmations right now of anything. We got maybe just a fake out, barcoding at the daily high. That's all we kind of got. We're still in this kind of parallel channel. We're kind of consolidating at the dotted line. So we know that that's a neutral area. And now we got sellers bringing it right back down. And this candle still has one more minute to go to the close. And I know that this candle, when it closes, wherever it closes, represents the first 5 minutes of that 30-minute candle. Okay? And then I know that there's going to be five more 5-minute candles to close off that 30-minute candle. And that's going to be the one that closes and we go into the futures market. So right now, we can say that the market is accumulating in anticipation of the 8 p.m. futures market open. So we know that maybe they're going to, continue to the upside, or they're going to start to bring it down. But we don't have any real confirmations as of yet. What I can see is every time the sellers come down, it's higher low, higher low, higher low. So it's showing me that the buyers are still there and they're still pushing it up. So if I was, going with a trend, I would be looking buy side. That would be my personal opinion, to scalp up to here. But I cannot fail to understand that even if I buy, I'm selling into a lot of selling volume right over here. This is where the market kept pushing down. It did come up today and then get rejected there and continue. And then that's where you had that big massive sell-off. Okay, so even if it does come up a little bit to the yellow line and a little higher, you still got to respect where you're trading into. Okay. Yes, it could break out of there. No, every day it could break through. So, but you still have to acknowledge it and just be aware of it. Okay. So now look at how the candle closed. It came right back up, and it closed right there, okay, with a little bit of black volume. Notice how the next candle opened. Ignited bearish. Just with that little tiny bit of volume, it had enough momentum to open the next candle bearish ignited and continue come down, where it just picked up another higher low wick. This is what we call a hanging man candle. So you see how it opened? It still got its strong selling volume, and it's still kind of pushing down the market. But every time it comes down there, buyers are bringing it right back up. So the one I always say, guys, let's watch to see if the opening balance, this black head here, if it will flip blue. And if it flips blue, it'll start to drive up. That's what we call a bullish pin bar, and it will have a wick. If it continues to fill the wick, we've got a hammer candle. And a hammer is the second strongest bullish candle next to the bullish engulfing, and the hammer could continue to fill wicks left behind, and then in order to create a new wick. But you still see how those offers are still holding on that bearish ignited head. The buyers pushed it up, but those sellers are still there. Buyers brought it up, those sellers are still there pushing it down. So every time it comes up there, it gets offers, more and more offers, and it keeps pushing down. So you see right now, and we're still in this consolidated area. We can analyze, but this is not great for trading in here. Sometimes you're going to get caught in a market like this, but that's why we have to have proper risk management when we're trading. Sometimes you're going to get caught in a market like this where it trades sideways. It's frustrating. Believe me, I guarantee you sellers are getting frustrated that it's not breaking down, and buyers are getting frustrated that it hasn't really popped out yet. Okay, but now look, they flipped the candle. Okay, this is the first time. This candle's been going on for 2 minutes now, and that's the first time in 2 minutes it's flipped blue. But did it flip blue and just drive? No. So it kind of came up. There's the wick, and then so it's pushing right back down. It wasn't kind of a crazy bullish move. So it just kind of popped that high, and now the sellers are still there pushing it right back down. Volume is still above this kind of point of control of this candle, still neutral. The sellers now are pushing it down. Now we have 2 more minutes and 20 seconds to go. So we got to watch into the close. Who closes it out and where? Does this analysis help? I know it's nice in the Tokyo session to learn, because sometimes in New York things are moving a lot more fast. There's a lot of news. There's a lot to keep up with. Right now, this is just kind of standard price action in a range. If you guys have any questions, ask me. I'm pretty good with price action. I can answer price action questions. Okay, now the candle is a hammer. Get to know your bodies of your candles, because they dictate the story of what happened from the opening balance, from the low, and where we're trading at right now. So look at it now. It's flipped to a hammer with 1 minute and 15 seconds to go. So it looks like the buyers have taken control of this candle. Remember the opening. Follow the narrative. It opened bearish ignited and dropped. Remember how many times it came back up and went back down, came back up, went back down, came back up, and went back down. Then you guys remember, I kept saying it was a bearish ignited head. Finally, it flipped into that bullish pin bar, and then it came back down. Then it came right back up with buyers. Then it flipped into a hammer, and now the hammer is doing its job, which is to backfill previous wicks. Okay? And now we'll get closing balance in 40 seconds. So I see a blue candle has not closed above this body, that body. I see a wick, a wick, a wick. This might be the first body of volume to close above this zone. And is it going to create a new high when it breaks? Is it going to close above? Can we catch a retest buy of here and continue going up? Here's the close in 15 seconds. What I also look for is, will it create a new high to advance the trend, right? If it can't make a new high, then it has not created a new higher high in order to continue this momentum. Then it might have to come down, pick up more buyers to continue break. Look at that. Now I look. When I'm studying a candle, I look at relative to the wick where it closed. So this is what I say, guys. Look at how small the wick is. Compared to that wick, that's a rather large wick. Compared to that wick, this is a tiny, tiny wick. It's kind of closed at 95, 97% of the high. Look at This is a fake out. This is where they say fuck you. Sorry for my French English here. This is what is called like a fuck you candle. Excuse me, guys, for that language. But you see, okay, this is where you gotta really zoom in on candles. How, after all that bullish volume and that momentum where it closed right to the high, how did this candle not just open up? It did, blew, and not take out that wick. How? I ask myself every single day when I'm in a buy and that happens to me, I say how? So there's your answer. Markets are manipulated, okay? There's nothing you can do, okay? If you're in a buy, you had a fantastic buy, when shit like this happens, you know, it's not your fault. It's not your fault, okay? I just want to make that clear. It's not your fault, okay? But what we got to do is ask ourselves, why did they do that? Why? Okay, they did it. There's nothing we can do. Whether you got caught in it, you're on the sidelines, or you're selling. Regardless, let's learn what just happened there. They shut it down, 740, bringing it right back down. This is a heavy bearish candle. Now it's, you know, did it make a new lower low? No, it didn't. All of that bear volume still has not created a new low. Right there is a higher low, and it's still coming up with buyers. So what it's telling me is that big bear candle doesn't scare the buyers down here. They're still coming in the market, right? Because if they were scared, they would be pulling their orders here and then repositioning them down here to get a better discount. They're still holding up. They're still, you know, that is technically a higher low, and they're still asking to trade up in here. Look at that. That's a good, solid return so far. But we still have a lot of time, 2 minutes and 50 seconds to dictate where this is going, okay? So you guys understand? That's showing me so far that buyers are not scared of this candle. They're continuing to load up, right? So you know when the market tries to scare you, you got to understand, is it really scaring you, or are they trying to push the market down, but the buyers are bringing it right back up? If we get a bear candle confirmed closing below here, then we know sellers are in control. They shut the market down and they've closed it below, and then we could kind of predict that it's going to maybe continue selling, right? Otherwise, we're still kind of narrating what's going on here. Does anything now switch your bias? Does anything now? Do you guys see something different? Remember, we're going in 15 more minutes into futures market, so everything is happening while we're going into the futures. Peter, the more you're talking, the more I realize these markets should not be traded. I'm not trying to turn you off from trading. I'm just trying to be real with you. This is how the market was trading kind of really tough yesterday when we were trading. You got to know your sessions. This is traditionally not the greatest time to be trading gold. You know, it's just been exciting the last few months because it's been crazy, but otherwise, we wouldn't be trading gold at this time at 6:30, 7 p.m., 7:30, you know, like, so we got to understand that the market the daily candle just opened up a couple hours ago. So the market is kind of accumulating in order to justify where they're starting the day. Okay? Just, you know, just be relaxed, you know, just take your time. You know, like everyone is saying, run, buy, sell, buy, sell, buy, sell. You see what I get every single day when I come on there? I just want to sometimes just analyze the market. I have no idea myself to buy or sell. And then I get bombarded with buy, sell, buy, sell, buy, sell. And I'm like, what are we buying? What are we selling? Like, look at what the market is showing us. So sometimes you gotta just be relaxed. Just figure out what's going on, okay? So right now, if I was to make a red block, I would go to that red line and to these bodies. You see right there, that's where I'm going to start a red block. Showing me they shut it down right there. The buyers could not advance any higher. It didn't make it to that 200 EMA. It didn't make to my daily point of interest. Rob, you got to go to sleep now. Rob, hopefully I didn't bore you. Maybe. Guys, I don't want to be putting people to sleep. Oh my God. I'll trade just to keep you guys awake. No, I understand, Rob. It's probably really late where you are, but I hope, guys, I'm not putting you guys to sleep. That's not what I'm trying to do, guys. Okay, now, did it close below the green zone? That one, yes, it did. Okay, so can we just play the flip game? Okay, Are you still considering a buy after what you just saw? Or are you leaning more sell side now, what you just saw? Does anything kind of change your perspective? Or are we still on the same bias? I'm asking you what you originally said. So think in your head. You don't have to tell me. I just want you to say, if you were originally saying bullish, does that bear candle now switch your bias? Or are you still bull side? Like, ask yourself this. You don't have to tell me. You don't got to tell me. I want you to answer yourself honestly. Okay? Just pretend as if you took the trade. If you were in a buy, what would you be doing now? Would you be panicking? If you were in a buy, would this candle scare you, this setup right now? Or if you were selling, would you be confident with this selling position that you're selling into buyers with all these higher low wicks? And we're about 14 minutes away from the futures market. Okay? And then overall, we're still in this consolidated neutral zone. Remember, I just used those two bodies, 3, 4, 5, and we're still inside here. So we really haven't moved anywhere. We're still kind of inside here. There's still, both sides are accumulating. This is great for studying. This is great for analysis. This is not good for live trading. I understand. Some of you guys said, Ron, I'm falling asleep here. That's why I tried to make this entertaining by taking a trade. But I don't want to just take a trade just to entertain you guys. Let's be real with ourselves here. Sometimes on a call, if we get on here and we don't take a trade, there's no trade. That's the way it goes. Sometimes we'll have exciting sessions where it's trade after trade after trade after trade. I think yesterday it was a little too aggressive with you guys. It was too aggressive yesterday. Okay. Now, what's going on? We're having an impulse candle breaking below. Okay, so now study this candle. Look at how it's selling from that big FU candle. This is why I like scalping. When you figure out a clue candle, that was the clue. Remember what I said? Ask yourself a million times, how the hell is that possible? That candle could not advance 2 pips. Impossible. Impossible. There's no way. I'm telling you right now, any market makers that are saying you guys are exposed, you guys are exposed to the entire world right now. I don't give a shit what broker you are. You guys are all exposed. And hopefully retail traders can pick up on these clues. If I was scalping that candle, close below, retest, that drop right there that took out that wick, that's a scalp. A scalp. Where you're in the candle for just this. You grab your 30 pips and you dip out of the market. You're not thinking about the next candle. You're not thinking about nothing. You picked up on that first clue, you saw the close below, you caught your retest, you got in the sell, stop loss right there. As it came down, you got in and out. That's it. If you want to learn scalping mindset, you got to learn scalping mindset. You can't be a scalper for 5 minutes and then turn it into a swing trade. You got to understand. Listen to what I'm saying. If you really want, because I get messages every day, says, Ron, I really want to become a scalper. And I say to them, you're not ready to become a scalper. You're not. Unless you understand that you could be only in a candle for 1 minute or 30 seconds. Look at the 1 minute candles. You see that 1 minute, look at that 1 minute. There's your clue. Came down. If you caught 50% of that 1 minute candle, there's your rejection shooting star. You could kind of just be in those 2 minutes and that's it. That's it. That's a scalp, guys. Okay? That's why you got to understand what you're trading. Are you looking to scalp or are you looking for bigger moves? If you're looking for bigger moves, stay out of that. That's not for you. You got to continue to watch what's going on the bigger picture. Okay? That's like a single bar move. And if it's not for you, it's not for you. I hate to break everyone's heart or break your bubble or whatever it is. But I hope someone broke my bubble too. But I was fascinated with scalping and I understand that I'm in and out for one minute. That's why with you guys, when I go up 50 pips like last night, I'm scratching my head. What the hell am I doing? Why am I still with an open stop loss? Why am I not at a break even? Because when it comes back to break even, then a lot of you guys are like, Ron, why did you go to break even? That's why. I have a scalper's mindset and it's not good for live education. So that's why I got to slow it down to these bars. Now, it came down. Did it close below any kind of critical areas? We're back below the purple. The purple was today's daily high. There's the wick now. Okay, so now we know how high it went. There was that big fake out right there. We're 10 minutes away from the futures and we're back below the daily high. Okay, so we could technically call that they grabbed some liquidity up there. They took out the pending orders at the highest point of the day. So we could literally continue to push down. However, buyers could come right back up. So this is where I'm going to clean up the zones, get rid of these, and we're going to focus again on the bigger picture here. We're going to continue to focus what's going on. Anything change your perspective now with what you guys are seeing? Does anything change? Did any of you guys flip to a sell side now? What happened to your buy side mindset at the start of the call? Or you guys still buy side? Milan, it's a bull trap. This candle told us everything. That candle right there. If you guys want studying after the call, study your 735, 740 candles. I'm telling you. Then this is how you know what's going on right now. Okay, look at now. Sellers are really redistributing. Okay, but they redistributed down there. That was a big black candle that came down at 705. And then it returned right back up and took us to that high point. So now you see where I have this red line? That's the cut line from that big bullish candle. So now the volume is coming down there. And do you guys notice anything else? We got rejected at that dotted line of this parallel channel. And now we're trading back at the bottom of the parallel channel. We have not had any bearish volume close below this red line since this afternoon. 1:30 p.m. Okay, so now this is the first candle breaking our parallel trend line. And if you are in a sell, okay, I want to be honest. If you took a sell like on this candle right here and you got these two bars, you are up 50 pips right now. This is where literally you take your stop loss and go to a break even. You're up 50 pips right now. I know everyone wants 100, 200 pips. I get it. I understand. But just lock in some money so you can put this in your journal as a winning trade and you can study it. Do you understand what I'm saying? Because you don't want this to turn into a loss. This is a fantastic setup if you read this properly and you got in. Okay, I'm telling you, this is an A+ setup. A+. Remember this candle? I said, guys, there's something fishy about that candle. The way how it closed right at that high and it didn't break. Right there, alarm bells should be going off. Something smells fishy up there. Okay? There's my fish emoji. Something smells fishy up there. Okay, when you see that, you're going to say something smells fishy up there. And I know some of you guys are not going to understand what I'm talking about. I thought I explained that properly when I said it's a fuck you candle. And the market is now, sorry guys, if you have children, put their earplugs in, put their earmuffs on. This is what the market said to the buyers. F you. That's a technical, that's what it's called. It's called an SST fuck you candle. We labeled that 20 years ago. I've been using that same term. I've been part of the FU candle, and then I really learned about it. Because I was that buyer that had FU. I had that last night to me during the futures market. The market said FU to me last night. And I got pissed off. But I didn't do any reckless trading. I didn't revenge. I didn't do anything silly. I said, okay, you guys said FU to me today. I'll probably say FU to you guys tomorrow morning in New York. Because you always get your last laugh if you just trade right. Now, we're moving into the futures in another 5 minutes. So what's going on now? What's happening? We are out of the parallel channel now. We're out of there, okay? Will the buyers bring it back into that channel? If they do, we have to acknowledge that area. There's the one top. That could be, if they do advance it, come back up, that could be the double top in that same red block, right? And then that would be the highest point of the day to bring it down for a double top. If the buyers can break it out and close above there, we flip it and then we're driving back up. Then buyers will be in control. So what I do is when I'm not in a trade, but I figure out something, see that red line, 4,190, I place an alert there. After this call, I'm going to go and watch the Raptors game. I'm going to go and watch basketball, but I have an alert there. If I get alerted, I'm watching the basketball game on a 65-inch TV right next to my trading station. So I'm laying on the couch watching the game. I'll get an alert. That doesn't mean I just run and go buy, sell blind. I watch what's happening. I go back into my analysis, just like I analyze that. And I look for a clue. I look for something that will happen up there. And I'm looking for a good setup there. If it continues to consolidate, then I've already marked it up where it could consolidate. And then I'm waiting for something up there. I'm looking for a clue. A trading is not always just looking for confirmation. It's not always just looking for a bullish candle that breaks and retests. We saw that with that first one, and it didn't really happen. So what you're also doing is a lot of mentors fail to tell traders you're looking for clues in the market, not just bullish and bearish confirmed candles with a retest. If trading was that easy, if it's just break and retest, everyone here would be multimillionaires. If trading was that easy, literally, guys. If that's all we're looking for is just a break and a retest, then everyone would be a millionaire here. But what separates other traders is the ones that can decipher what is a clue or what is like kind of a fuck you situation in the markets. That's what you got to identify. That's what you got to keep your eyes on. So that's what we got to find. Now we're 3 minutes away. See now how the volume has really opened up in the candles now? This is volatility. Remember that blog we just talked about? So this is now volatility is increasing. Why? Because a major global financial session is opening up in the next 2 minutes. Okay, so that's why we're getting added volume. Now, does anything switch your bias? Buy. A lot of you guys are saying buy right now. Sell? You guys are selling? Okay. Did you guys, anyone cut this candle in half or no? Are we using this original red line? That's what we're going to use. Okay. Now, if you're thinking of buying, you got to know if that blue volume fills up to that red box, there could be a seller waiting there to sell it back down. They showed us that the seller is right here. Okay. So if it comes all the way back up there, yes, buyers could break it out of there. Absolutely. But we still have to understand that there could be a seller there. There was a seller there. Why would he not be there? That's what I tell myself. Anytime I see that, that's how I kind of get ready for maybe a double top. It came up. There's the neckline. You can see now where it pivoted. It stopped bleeding right there. Stopped. And now it's coming back up. So is it going to come back and touch this purple line and go back down, lower high? Is it going to come right back in that red zone and go down, double top? Or is it going to advance for a new higher high? I don't know until the volume gets there. Okay. But what I can continue to do is I can see that they're creating an inside block. How? Look here. This is an inside block. Remember what I said? Inside blocks are not as strong as a bigger, like this block at the opening balance. There now we have the structure developed at the daily high wick. This is just an inside block. But you see how it's holding support, 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 support still? So it's still support. So now you see where the volume is now trading. Okay? I'm going to get rid of all these cut lines. I want us to stay focused. What type of candle is this coming up? Anyone know what this candle is called? Here's futures market open. So look at the volume. The blue volume happened to come right back into our parallel channel. Now let's see if we'll get a retest at 50% of this blue candle, right? We should expect a wick right there. Point of control of that strong candle. If it doesn't hold there, then it's going to retest this inside block green zone. So it's bearish coming right back down. This is now futures market open. Get ready, okay? Spreads, my spread is 1.2 right now. 1.5, it's rather high. Look how we're bearish, bullish, bearish. Who wants to continue selling with this market? Should we wait for the break of this block and a black candle close, or do we just go on impulse? I can see there was an impulse there, impulse there, impulse there, failed. Impulse there, impulse there, failed. So, but now someone will say, well, Ron, this is now futures market. It's got more volume. It could impulse and break. Yes, you are correct. But I tried that yesterday. Remember, I tried the impulse breakout at futures market open, and they rejected me, and I got stopped out. So I went in too early. Had I waited for that candle close, I would not have taken that buy. Okay, so I could say the same thing right now. We could all go in and impulse sell, hoping that it's going to break down with the futures volume, and then they fake us out and go back up. Look at right there, how it came into the green zone. Buyers are there, and they're bringing it right back up. Okay, so now we got to go with what we learned over here. Will they flip the volume and then start filling back up to here? Why don't we determine if it's going to be a second top and wait for the second top? There, see how it came up? Lower, high, and now black volume coming right back down. So this candle's closing in 3 minutes. So should we take it now? Should we go in and sell now, or continue waiting out 3 more minutes? What do you guys think? You guys tell me. I'll trade. You guys tell me, and I'll trade with what you guys tell me tonight. But wait, Tyrone, you're absolutely correct. Sherry, you're 100% correct. Guys, when in doubt, wait it out. I don't know where this could go. So when in doubt, wait it out. There's nothing wrong with waiting it out. Some of you guys are already in a buy. Some of you guys are in a sell. Okay? You're going to see what's going to be the outcome. And then if it comes down here, are you going to panic if you're in a buy? If you're in a sell, are you going to panic if it's trading back at the daily high? Are you going to panic, or are you going to be cool as a cucumber and not panic? Okay? Look at that big rejection wick. Now it's coming right back up. Is this going to, remember we learned what a hammer candle was when that flipped? Now this is flipping to a hammer. So remember what I told you. Rule number 1 for a hammer is to backfill the previous wick. That's the rules, price action rules of a hammer. Hammer's not to go from here and go to the all-time high. It's not to go from here and go to the daily high. It's to just backfill the previous wick. That's what the hammer's job is. Every candle has a job. Just like you and I have a job in every single day what we do. This candle is going to work right now. This hammer is going to work. It's putting in overtime right now because this hammer is now backfilling 2 wicks. So this candle is really putting in work. Okay? So it's now, is it going to fill up 3 wicks? Is it going to get exhausted at some point? Or is it going to continue momentum going into the next candle? Now you see we found supporting block coming back up. Now it's game time. We came up, we came down. Now it's coming up. You guys will watch an impulse breakout, daily high, a rejection, come back down. Let's see. Now we got 1 more minute to go. Anyone buy? You're up 60 pips, Karen. Amazing, okay? But did anyone sell from there to that block and get out? And if you didn't, this is a learning opportunity for you to say, why did you not close out, in that zone? That zone is, you can go back and look to the left, why it's a zone. So we're literally now doing zone to zone trading, from the red zone to the green zone. Now we got to see, will it advance higher? Will it create a new high? We're trading back at the highest point. Are we still waiting, or now are we going to just go in on a buy? What are we doing? Waiting, Sherry, still? Look at the daily candle too. Still bullish ignited. You know when it came down right there, it refueled itself and it's now trying to take out the highest wick. You know when a 5-minute candle refuels and tries to take out the wick and go higher? Now if it does, where could it go? Okay, so I take this red zone and I go backwards. I can see how it held support there, support there, support there. So that's why if I'm going to that yellow line. That's where it's from 189, 190 to 195. $5 move in gold is 50 additional pips if you're still looking for a buy or you're holding a buy. Now, look, it came in, it tagged the red box. Sellers rejected it back down. It opened bullish, came back up, could not take up that. It's a lower high. Now we got sellers bringing it right back down. And it's literally at the second top. Okay? So it came up one time. There's the neckline. Came back up. You can see 2 wicks in that red box, and we've got black volume pushing it down. Okay? Should we trade now, or should we continue to wait it out? What do you guys think? Is this enough for us to take a buy or enough information for us to hit the sell? We saw the sellers come down, It's got a higher low wick coming right back up. Okay, so you see this zone? That was consolidation. I bring it into the future and we're right back trading in that shit zone again. Okay? It's good. It's a lot of learning tonight, guys. If you want to learn, tonight's a learning night. Maybe we'll grab a trade, but we're still learning. Rob, we'll wait until it hits that block, the red one. Oh my God, Miguel, greetings from Antarctica. Wow. Guys, continue liking the stream. You see, we found traders in Antarctica. Amazing. Thank you. Guys, thank you, guys. If you like this type of analysis, subscribe to the channel. We have fun. We will be trading, okay? We will, we trade. But once in a while, we got to go right back to the drawing board and we got to educate, okay? Okay, now again, bearish, higher low, coming right back up. So this is the second leg, right? This is the second leg. First leg going up, second leg coming up. I always say the second leg traditionally has more volume to continue to break this red block. So let's see if it's true what Ron says. And I'm not saying like it's going to happen 100%, let's all go in buys, but price action rules 101 says the second leg of any major move traditionally has more volume. Why? Because it doesn't just have 1 times the amount of buyers, it's got now 2 times the amount of same buyers at that same location. So 2 is bigger than 1, so it should logically, mathematically continue to break out. If we don't see that, then again, a light bulb goes off in my head and say, why are the buyers not breaking out this point with the second bottom, right? So that's what we should be asking ourselves. Why have the buyers not broke out of this red zone with all of that bullish volume? Okay, then that should tell us that there's sellers maybe selling the second high, and they could now traditionally have the second leg coming down with bear volume, right? But tonight's move is going to happen. See, it came up, didn't break, coming down, coming back up. So tonight's move is either going to break this and do this, or it's going to do this and do that, right? We could literally leave these arrows here and we'll see which one happens. And let's see which one you're leaning towards with fake outs as well. That's why we got to look for our clues. These are just break, confirmed, and retest. Remember what I told you? If every trader just did break and retest trading, we would all be millionaires. Now, what separates other traders is the traders that look for clues. This type of trade that comes down here, breaks, maybe catches a wick, goes back in, retest this, then we buy. And then all of those sellers that sold the impulse, and we're buying the confirmed retest with the liquidity grab. That's now where you're taking your trading to the next level. I'm not saying that's top tier level, but it's a little bit more advanced than just a break and retest. Okay? Do you guys understand that? I think I'm going to entertain a sell. This has 4 minutes to go. I'm going to entertain a sell. I'm going to go in, see if the second leg has the majority of volume to come back down to this green zone after it's been rejected 2 times, equal highs. It's holding up, and I'm looking to take the trade to the green zone. And if it comes down there, I'm up 50 pips. My stop loss now, I could go really tight just above the previous candle's wick right there. But I could get stopped out on the next candle that just goes up blue. Okay, so do I want to just be just right above those 2 equal highs right there? I feel confident there. But if I'm this close to that the daily high, I might as well just leave it at the daily high. Okay, and I'm going to see now coming down to the green box. If it comes down to the green box, then I'll start to reduce risk, hopefully get it down to a break even, and maybe see if it can break the green box. But if the buyers now say, it's not breaking, we're coming right back up, I no longer want to be in this trade. Why? Because if it breaks out of here, it could be that impulse. I suffer more drawdown. It could break and I'm still holding it and then retest and then drive. And then I'm stuck in that when I don't need to be. So that's more than enough risk that I'm giving it. You see, guys, I'm just using structure. I'm not using anything. I'm just looking at the structure of the market, where to place it, okay? And now it is coming down in profit. Again, if I'm a 1 minute scalper, that's 20 pips. That's kind of all I look for with zero drawdown. I'm in and out. If I want right now, I could close this trade for 20 pips and I'm done. But I hold these things for you guys to see if we're going to continue to break down. Let's see now. Let's test that red line right there. That's 30 pips. Okay, and that's testing that previous point of interest. I know there's so many of these red arrows. I have to get rid of. Shit! I got to get rid of these these arrows. Or can you guys still see? Okay, now I'm going to a break even. That's it. I'm up 30 pips. I'm at break even. This is for education, guys, not financial advice. I'm at a break even now, so we'll see. And then we'll see. Did Ron make a mistake? Not taking out anything at that red line. I have it pre-marked. I'm at a break even now, so I have no risk, nothing. Candles closing in 90 seconds. Sellers are still pushing down to that red line. Can they break now with that further offers that they're getting? So if it just breaks, we drop another 40 pips. Maybe we get down to our 50. But if we're still following the volume, can we close below this red line with this black volume? Because if we do, we come back, we get a wick at the red line, then we can advance on the next candle. Okay? Sherry, you already took your profits? Congrats. There's nothing wrong with it. You see, I'm not a person that faults people for taking out profit. I get faulted all the time. And I'm trying for the life of me to hold trades with you guys as much as I can. But I want to educate as well. I know. But look I sold the second leg, okay? And it's in money. It's in the money. It's not 200 pips. It's not the biggest drop ever, but it's still pretty good. 40 pips with zero drawdown. Come on, guys. And I'm a scalper and I'm still holding this shit. Random things, you got 20 pips? Good. Okay, now we got to seriously watch, okay? We can't get excited. We got to stay composed. 27 seconds. Coming right back up. I'll tell you guys if I get tapped out. Let's see who has momentum to go into the close. Whether you're in the trade or not, we still got to watch and see. We got to be prepared for the next body. Okay, 10 seconds. Let's see. I'm still in the money. Still in. Still pushing down. Where are we going to close? And then first thing I'm doing is cutting the body in half. Wherever it closes, cutting it in half. Get in the habit of doing this. There's a close, cut in half. It's basically right where I entered is the half point. Ignited bearish candle, open. So that's first thing. And now it didn't hold, flip, blue. Okay, so it's got its wick coming up. It's probably going to retest 50%. So I need a lower high wick to stay in this trade because I'm at a break even. I need a lower high like right now to keep me in this. There's the wick rejected. I'm still in. So it's got to kind of absorb all of that buying volume and continue to flip this candle. If it comes up blue, you can see I'm going to get stopped out at break even. Okay, and it's a learning candle right there. I got stopped out at break even. Okay, and then we're going to learn about break evens. Did I go into a break even too fast? Did I not take out any profit? What just happened there? Okay, I didn't scale out 80%. Christoph, yes. See why you guys got to understand my mindset, guys. You know, that's why my mindset is that can't, like, it's sick to my stomach watching that. It dropped 35 pips with zero drawdown. Remember what I tell you guys? I trade for 50 to 100 pips a day is my daily goal. And I do a lot of this on my own time for you guys to educate. And I do it live with you guys. I take trades with you, and I also give up profit too, to teach lessons, guys. You see? Now, if you rated me on that scalp, what would you rate me? It's not perfect because I didn't take out any money. But what I look at the positives is I look at my entry. Could I have done anything better? If I was still sitting with my stop loss, now I could be in drawdown. So I have capital at risk, right? So that's now not good. So the break even, I didn't win, I didn't lose. But now I look back at the trade, see why break evens help you? Yes, I realize I didn't make any money. But look at this big bull candle. If I didn't go to a break even, remember what I told you my stop loss was? Above those wicks. Like it could now hit my stop loss and then it's an L for the day when right now I just have a BE. So you understand now, guys, why you got to really understand your own plan as a trader. If this is too fast for you, you shouldn't be focused on 5-minute candles. I'm telling you, you can't, because then you gotta go through the motions again. Okay, so let's continue to follow this. So now, did the sellers do their job, kind of breaking it down below there? No, buyers are coming right back in. But now let's analyze. It hit the top of the purple line, the previous daily high. Now the sellers are there rejecting it back down. Okay, I don't play the woulda, shoulda, coulda game to say, well, if I was still in, I could have. No, I don't play that game. I'm sorry. There's some of you guys that play that game. I don't. Okay, so I remember what I said. I could have kept my stop loss above the wick and I still would have been in. And look at now where those sellers are. So whether you took the trade, you're still in it, or BE or whatever, learn from this. See that bull candle, bullish, 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 bullish? Look at where the big sellers were. So if you just had your stop loss just a little higher than that, look at, now you got a flip and a selling candle coming down. Now here's that leg coming down. So it just needed more sellers, right? I'm a very technical trader, so I go to break evens fast. Reason why I do it too is because of YouTube. I know some of you guys need the encouragement to get you guys to a break even or remind you. So, but now, bigger picture is this big rejection coming down. What we got to see is maybe we'll take another sell, but can it break this green block? Okay, you got to get that trade in and out of your head now. It's gone. You can't dwell on it. I already thought about it. I already know my mistake. I critique myself. I'm done with that trade. I'm not thinking about this. Now I'm continuing to see what's going on. This is a big green block in the market. This is that's a big rejection with some serious volume coming down. So the sellers should be able to impulsively break this green block right now on this candle with 1 minute to go. No questions. If they can't break this, they're failed. That's a failed candle. And you see how the buyers sense weakness on these sellers and they're bringing it right back up. And then now we got that indecision candle. So again, the market is just playing ping pong. Okay, and we still have not broke from our big red zone or our green zone. I just took a quick 35 pip scalp inside the zone. That's what I mean, guys. You got to stay disciplined when you're doing trading inside the shit zone. Like, when the market rewards you with 10, 20, 30, 35 pips in this shitty area, how can we leave that money on the table? It's my own stupidity right there. And you guys can critique me, fault me. I don't care. Okay? I'm live. I do this with you guys. I don't backtest shit. Okay? That's what separates me and other YouTube traders. I'm here every single day, any market with you guys, any security. I don't give a fuck. If it's a candlestick and it's a chart, I'll trade it. I don't care. And I show you guys break evens. I show you guys losses. I show you guys wins. I break shit down. We show you what like real emotions involved. I just pissed away 35 pips of money at zero drawdown. Pure stupidity. Pure stupidity. Yeah, you guys can call me stupid. Yeah, I agree. You see how I went against my rules, right? I have rules. Most of you guys that know me, that have been trading with me for a few years now, know that I have rules. 80-20. And now you guys see I'm not following my rules. And I'm deviating from my rules. And you see like I'm kind of like, I don't know what I'm doing anymore. That's why you guys got to stick to your plan when you're trading. Whether it's a swing trading plan, stick to it. Whether it's you're waiting for your ICT, your inversions, whatever it is, wait for your plan. If you understand what you're looking for, nobody knows better than you, right? And if you know how to manage your own risk, no one knows better than you. No one can tell me how to manage my risk. I can't tell you how to manage your risk. Everyone is looking for that cookie cutter strategy, that cookie cutter approach. No, there is no, I wish I could tell you that that's how it is. Everybody has their own individual daily goals. You know, everyone has their own shit. Someone might say 35 pips is, I would die for 35 pips if I can make that in a day. And they just watch me piss it away. That's what I mean, guys. You have to appreciate when the market is rewarding you for good behavior, take it. If you have to close out the trade, close it. You know, realize some money. I have 80-20 rule. That's why I do that. I take out 80%. If I took out 80% of that 35 pips, I'm very happy. And then I leave 20%. That 20% would have came and grabbed me at break even, I would have been okay. But I would have still known that I took out 80%. The bulk of the volume down, right? So you got to understand what you're looking for. I tried to see if this futures market would break this block, then it would turn into 50 pips. Remember I measured coming down into here? It's exactly now measured in there, 50, 60 pips. But that retest candle, that's what got me. So, you know, just learn from that, guys. Maybe I went to a break even on that same candle. If I just left it for one more candle, yeah, that candle would have came up. I would have saw my 35 pips just go back to zero, and then I would have been right back in it, okay? So you got to know, guys, don't try and trade like me. Don't try and compare yourselves to me. I don't try to trade like you, and I don't compare myself to you. Everyone has their own plan every single day. Please just utilize what I'm trying to teach, utilize what someone else is trying to teach, utilize what you're learning, and put it all together, and you'll find out what works best for you, okay? I told you with candlesticks. If it's candlesticks, I can teach you guys this, no problem. I'm self-taught. I'm 110, not 100%, I'm 110% with candlesticks. If you have any questions, I probably will figure it out for you guys. Okay? If you even tell me your trade setup, I can review it with you. I can narrate it for you. I can tell you exactly what you did well, what you didn't do, what you need to work on. Because I do this every single day with myself. And I'm pretty hard on myself. I critique myself. You know, I'm a student to this game every single day. I learn from each and individual candle. Now look at, okay? So look at now, learn. What held up? The double top. Remember that big FU candle? That's what started. That's what narrated this. There's your tweezer top highs. That's why I felt comfortable taking that sell on that candle. But, you know, you guys saw live what just happened. But then look at it. It came back up, lower high. Now we're breaking. There's the break. They're redistributing the volume below here. So some of you guys know this is going to be a fake out or it's going to actually close below here. So let's follow this candle now. And we're going into what time? 8:30. So this is the close of a 30-minute candle. You see how this shit happens over and over and over? Look at your 30-minute candle now. You don't have to continue to focus on fives. So you see we came up, 7 p.m., 7:30, the big FU candle came down, back up. We opened, look at it come back up, retest. That was the second top. Remember I sold on that 5-minute candle, but then it came back. Now your 30-minute candle is breaking. Did it break that low? Yes, it did. Will it close below? Will we flip this green zone red? Will we get one more 30-minute candle coming down, testing the opening balance purple line? Or are buyers going to protect it and bring it back in, bounce off this green line, and then we're going to get 5-minute volume coming back up? This is critical, guys. Now, you guys know I'm not a 30-minute trader, but I'm studying the 30 minutes right now. Okay, so if you're a 30-minute trader, this candle's closing in 5 minutes. Be patient. Watch. If you waited for 25 minutes now, what the hell is 5 more minutes? Wait. See where this will confirm closure. But I like to zoom in on the 5 minutes. I know that this is the closing action of a 30-minute candle. And look at where all this shit is happening. Right there. Are you kidding me? It's like someone scripted this right now. Do you guys like these type of sessions where we do education, we trade? It's not as aggressive yesterday. I think yesterday was a little bit too aggressive for some of you guys on YouTube. So it's my apologies, guys. Once in a while, Ron has to get it out and just, I'm a scalper. I'm a scalper by blood. Someone asked me, do I scalp every single candle? Admittedly, yes, I do. But I don't want to do that live if people have no idea what the hell's going on. Because you see, I can't even do it on the 5 minutes. Where I go up 35 pips and I can't even see how could I do that on 1 minute? It's too fast, guys. And that's how we started in Stock Sniper trading. We scalped 1 minute candles live for over a year straight. That's where I think we built all of our following. It was exciting, you know, but I've slowed it down to 5 minutes. I could do 15-minute sessions with you guys. If you guys really want to see me trade 15-minute candles, you'll learn a lot because we'll slow it down, but we'll educate. I'm telling you guys, if you guys get me slowing down the markets, you guys will learn more. If you guys say, Ron, go to the 4-hour candles and do outlooks, guys, we could be swing pip traders. We could be collecting 1,000 to 2,000, 3,000 pips a week if you guys want. You guys tell me. What's my win rate? It's pretty good. I live a comfortable life. That's all you got to know. I'm above 70% win rate when I'm actually trading for real, when I'm taking out money and not playing, you know, I'm not educating. I do a lot of, you see, sometimes when you guys don't see me doing live New Yorks or anything, I'm doing my own private trading where I can be the trader that I like to be, me and Miss Dow Jones, and just me and her. Me and Miss Dow Jones, just takes two to tango, just me and her, no audience. That's where I love doing that, guys. Sometimes, don't you guys just love trading by yourself once in a while? You know, where you can just be you. Now, while we're talking and being silly here, do we not see what the hell is going on in the market right now? Anyone got any kind of alarms going off? I do. Anyone, I'll let you guys explain to me. What do you guys see right now with these two body of candles? Please break it down for me, someone. You guys educate me now. Teach me something. What do you guys see on this candle at 820 and this one at 825? More than ping pong, Omar. More than a pullback, Sherry. I'm talking, guys, get real technical with me. Get down and dirty with me. I want the dirty, dirty talkers. I want the dirty technical talkers. Where are you guys? Don't be conservative now. Get down and dirty with me. Let me just break it down, okay? This was a big bear candle, breaking that block. Look at where it closed relative to the low, right? Look at how the candle opened and just flashed black and couldn't take out that wick. Then it came blue, 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 back up. Look at where it got rejected at right below the opening balance, and now sellers are pushing it down, okay? So it did, that return was real nice and bullish, but right away that candle didn't open and take out that low. It should have. But now you see it came up there, and look at these sellers. They're coming in on the 30 minutes, the 30-minute candle. It's kind of absorbing all those. So this could have further room to drop in the next 30 minutes. Here we go, okay? Now, wow, okay, it's a big shooting star candle. It's going to close in 40 seconds. If it closes below, guys, okay, I'm going to do this ahead of time. If it closes below, we're going to change the green box to red. Not the size of it, nothing. Change the color. That's it, Justin, a huge fuck you candle. Yes, that's what I wanted. Someone to talk dirty to me. Yes, that's what that is. And look at the timing of it. Guys, you got to read the story of candlesticks. The candles tell you a story, right? The Japanese invented these. The Japanese are pretty smart human beings. They invented these, not last year, not 20 years ago, 200-300 years ago. They invented these, okay? Tells the story of everything. Here we go now. Okay, so first thing is, if we're looking for a sell, maybe we sell this red zone, right? So let's just hypothetically use a pending order to see. Would this be a good area to sell? I'm just hypothetical. See how the buyers are coming up right now? Have we retested this block yet? No. This was the first bar that closed below. That was that big bull candle that came up. They rejected back down. Look at that. That was a blue candle that came in. Did it touch the red zone? No. So sellers are there with a lower high right now. Okay? So they are pushing it down. So they could get rid of all this blue volume and take out those wicks and keep dropping down to the opening balance. So all of these buyers at the opening price are holding. Which bar is it? Do you not see that blue bar right there? If I was to cut that blue bar in half right there, look at where it is, guys. How many of you guys did this? So you see, 6 p.m. Guys, come on. I need you guys to be ahead of me. The more you guys are ahead of me, the better you guys will do on these calls. Did anybody cut that 6 p.m. bar, or you guys were sleeping? Someone said, Ron, I got to go to sleep. And you see, they're sleeping. When you sleep, you're going to miss out on money. Right there. If you did that point of control, look, you had a pending buy in profit right now. Guys, I do this like clockwork on a daily basis. I learned this 20 years ago. Like, it's not for, I'm just doing this to show you guys that look at what's happening. So if you just had a pending order, it's activated right now to sell that block. But you have this huge opening day balance volume picking that up. So now it impulsively broke through there. That's why I personally don't kind of like using pending orders when I'm trading right at the computer. Okay? Because I could literally watch the candle and I can market execute when I want. But if you want to use pending orders in blocks, you got to know that you're activated and you cannot control now what the candle is going to do. But you got to know what candle is returning. This is a pretty strong candle. It's the opening point of control of 6 p.m. in the daily candle. So you see right there where we found some support now. They're protecting the opening day's balance right now. Right there. Now let's see. And if you got filled on that, guys, just like that, that's a 60 pip candle. Like that's, like, you know what I mean? Now look at the rejection. So if you had your pending sell, you got filled. You encountered a tiny bit of drawdown, but you're in the money right now because it's coming right back down. So if you're not in a trade, we are observing. We are spectators. We are on the sidelines. We are watching now consolidation in between these two tight blocks right here. We're smart. We know that the volume is not just going to trade in here all day. Buyers might advance it back up here, or sellers are going to try everything in their power to break this opening balance and drop it down to this yellow line. Watch and see. Anybody take that pending sell and that buy, you were in the money. If you didn't do anything, you just pissed away about 50, 60 pips, okay? And if you're in a sell, you're in the money right now. Do you guys understand what I mean? If you know where to set orders, you're looking for high probable setup. So someone asked me, Ron, what type of trader are you? When I said I'm above 70% is because I trade off of these blocks all day, every day. Higher time frame blocks hold more weight. That's it. Anybody got that pending sell? Look at right away when it got activated, you're up 50 pips right now. Like, yes, did you guys freak out when it encountered this much drawdown? It encountered 15 pips of drawdown and it went up 40, 50 pips. So that's your risk to reward. If you unrealized 15 pips to make 45, that's a 1 to 3 on your money. 3 to 1 on your money, right? You bet $1 to make $3. You bet $10 to make 30. I'll take those trades all day. I'm a normal 1-to-1 trader. If I can get 1 to 3 on my money, all day. Dave, you made $100 from the call. Good job. Good job. See, guys? Now, the sellers are still in control. That was a big buying candle. That represented 6 o'clock, the opening balance. And you see how tough the sellers are? That's like Shaquille O'Neal. slam them down, slam them right to the ground. Now here's the closing 17 seconds. Wow. So the next candle might come up again, blue, 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 but look at the size of the wick it has to fill. It's not a short wick. It's got a big momentum to fill. So I think sellers are going to continue to target this purple line and try and break, sweep the liquidity below the lowest point. There it closed in the zone. So you see how it closed inside? I cannot change the zone. I'm very technical. A lot of traders hate that about me. I don't care. This is what I do. I don't make this box red or green until I see volume above or below. The volume is still inside. This is still a green zone from this block, right? Those sellers had a chance to close it below there. They didn't. Now you see the buyers bringing it right back up. But that's a big wick to fill. So if the buyers can prove to me that they can fill that entire wick and close it above here, you don't think I'm going to buy that next move coming up here? Are you kidding me? No, and then if sellers bring it below here, I could continue to move down with them. But do I want to take an impulse with them? That's the question. If they break this, do I take the impulse sell to fill to that? And then I could get my 25 pips, maybe break down to those bodies right there, get 30, 40, and then it could get a nasty wick and come right back up. So risk to reward. Is it worth it to take that trade down there? No. I would rather want to see sellers, break that and close below or get rejected off there than the bigger sell, right? You got to know what are better setups. That's good, but it's too risky down there. That's the opening balance. Risky. Okay? And you see why I kept it green. The buyers are still there. Now again, they got rejected. Guys, understanding candlesticks is fantastic. You don't understand how this can change your life for the better. I'm honestly telling you the honest God. I'm a very honest person. Very honest. I have a good soul and a good heart, guys. I'm telling you the honest truth. If you put the time and effort into learning this, you could change your life. I'm not going to say everyone here is going to become financially free, because some of you guys won't. Some of you guys are going to lose a lot of money in these markets because you guys are gambling. And I hope that you guys stop. But some of you guys are really in our group. You guys can see in our Discord. There's some traders in there changing their lives. And it's amazing to see this. It is. Truly it is. And I know you guys can do it too. Believe me, I figured out how to do it. I was struggling probably more than everybody added up in this entire group here. But I figured out there's a way. There's a way. It just takes a lot of hard work. If you put in the work, the market will reward you. See, we're putting in the work tonight. We're having fun. We're learning. I'm putting in the work with you. You guys are putting the work with me. We're learning. I told you guys are going to learn something. I know some of you guys want just trade. But sometimes look at how much we learned tonight. Take this now with you for trading into tomorrow. I'm telling you, that FU situation right there, all of these wicks, the mistake Ron made where he was 35 pips and didn't do his 80-20 or whatever, or too fast of a break even. Look at how it came into this buy zone right there. There's a beautiful bull candle that produced 60 pips out of it. And then where I said put a pending sell order at that block on the retest, and it dropped right back down. But there's so much you can learn from this call. It's too much, it's so much just from this session. And then if we look, we haven't really moved anywhere yet. Okay? And then look at it now, coming right back up. So this is a strong candle. Let's watch the close. So again, if it closes above this red zone, I see that it came down to the point of control of the opening balance. The buyers are there, bringing it right back up. If it closes here, I make this red zone green. I could buy at that red line right there. As soon as it comes back down to 4,179, I'm buying the confirmed candle with the retest. If it comes a little lower, I would rather want to buy down at the green block, because that's the double bottom protecting the daily low. If I can buy the below the purple line or there, that would be obviously the best. Tell me one thing that you guys learned from tonight's call, please. Something positive that you learned. I don't care how much money you're up. Cash, honestly, bro, I love you, but I don't care. Guys, I don't care about money. We'll all do this to make money, but tell me one educational thing that you learned from tonight that can help you. One educational thing. Patience, Trevor, amazing. Cut line, lavish, yes. The cut line. Yep. When price gets too high, we got to cut it, right? There's something fishy, the fish. Okay. Something was fishy up there, right? Zoom in. Yeah. I love zooming in. Milan, I zoom in like I go right in like this. I'm right in there. That's why I'm looking at those wicks. You know, I go right in. Milan, I'm like this. On the 1 minute. This is me inside here. Like I zoom right in, guys. The candlesticks will tell you everything you need to know. You just got to be patient. Look at the candle. Okay. Did we even close with a wick? Look. Okay. Look at where we closed with no wick right at the high. It opened, just broke out a little bit. Now it's pulling back. So red zone green, right? Let's just go through this quickly because I'm about to wrap up this call in a little bit. Let's measure that candle. Do your Fibonacci. Look, tell me if the zones don't correlate with what we're doing. Look at open, close. Look at the cut line is right there. There it is. The zone, I could just advance my own little green zone just a tad bit down. Okay, so you see we're getting a shallow pullback right now. Right there, shallow pullback. We haven't advanced into the zone. And if it comes up here, it could just break that wick and continue traveling up. Unless something fishy is happening up here. Okay? That's what I mean. Something is fishy up here. How did this candle, with all of that volume, let's measure the entire candle. That is a 100 pip candle. How did it not move 1 pip above here? Something is fishy, right? Something is fishy. Something smells fishy. A market maker smells fishy. So they're artificially manipulating, holding it down without letting it to break because they need it to come down to grab more pending orders. You guys understand what I'm saying? You pick up what I'm putting down? Has it tapped into the zone? Not yet. Technically, it hasn't. Sometimes it came a higher low. Let's see now. So technically, this candle should flip, turn into a hammer, and drive. Where will it drive? Hammer's job is to backfill that wick. That was that nasty wick that took me out at break even. So even if you just measure to backfill, it's a 30 pip backfill. That's what I mean. Trade from a line to a line. Forget about trading from Monday to next Friday. Trade from here to there. That's it. And when you know how to do this confidently, guys, no secret, I trade with standard lots or bigger. If I get that 30 pip, that's $300 US. That's someone working a 8 to 10 hour shift that I could literally get in less than 5 minutes by waiting in these markets. Okay, I didn't start trading with standard sizes. I built my way up over the years. I was trading with 10 cents. I was seeing if 10 cents would come up there and make me, if it would make me $3 to buy me a coffee. To buy me a coffee for sitting staring at the computers for 5 hours a day studying this, could I at least pay myself a coffee? And if I did, it was worth it. Because I knew the coffee could turn into something else. So even if you're practicing, guys, even if you're using a $100 account, you got 10 cents in there, eventually when you learn how to do this, prop firms are waiting for you guys. If you have the capital, God bless. But if you need a prop firm, they're waiting for you guys. They're waiting to find good traders. They need disciplined traders. They want disciplined traders. They will pay you out if you are good. You will lose if you don't know what you're doing, right? So something is fishy up there. So we got to understand that there's heavy sellers here. That's a lower high in the market from there to there. So this is where you can technically start seeing a trend coming down. Sorry for all these trend lines, but I want you guys to learn a trend line. You see, it's coming down. We are descending. So if it comes back down, look at now where we're trading in, the block now. So I know now where we're consolidating. Right in here. You can literally trap the volume right in here. You can literally wait it out because we know that it's not just going to trade in here all day. It's eventually going to try and break this trend and get back up there to that red box. Maybe there's another 50 to 60 pips up there. Or it's going to continue to break down and drop. Okay. And cash, before I go, cash, if you're still on the call, Can you add me on my Instagram? I'll put the Instagram in the chat. Anyone, if you want to join on my Instagram or Stock Sniper Trading, please join. And I'm getting a little more active on it. I'm an old man. I can barely even use a telephone, and now I'm learning how to use social media. I'm like that uncle that doesn't know what the fuck he's doing on social media, but I'm having fun. My daughter's helping me. Okay, so if you want cash, message me on there, because I appreciate you, and I want to help you out with anything you need in trading. I did it with someone on Zoom the other week, and now it's YouTube to get some love. Okay, guys, I got to wrap it up because I'm going to go watch the Raptors game for a little bit. Tonight was like a end of the week kind of education to get you guys thinking about something over the weekend. I hope you guys enjoy these calls. Next week, again, we're going to do some Tokyo sessions. But next week, we're going to get right back in these markets, have some fun. Guys, if I don't see you guys, enjoy your weekend. To all the snipers enrolled in the day 3 of the boot camp, we're going to do it Sunday. I'm going to change the time because I forgot it's World Cup qualifying. England and Albania play day 1 today. England beat Serbia. Albania beat Andorra. I saw Ireland beat Portugal. So some crazy games, but we're going to move it maybe till 9:30 a.m. on Sunday. I'll put it in the Discord. All lifetimers are in it and everyone enrolled. That's going to be the Q&A for the risk management, and we'll do the charting. But guys, I had fun. Look at now we're barcoding, so it could continue to go to the upside. You see how the volume is just kind of trading? And this is what I do. I scalp from this red line to that purple line, maybe up to there. If it starts moving up, I take my stop loss, go to break even, grab some pips. You know, maybe you will. I trade for like a baseball game. This is like a single. If it goes up to that line, it's a double. If it goes all the way up there, it's a triple. Once in a while, you're going to hit a grand slam. You're going to get in a trade, and it's just a monster candle coming out of there. Scalpers do get rewarded with big moves, too. I take a scalp, and sometimes it goes 100 pips in my favor, but I'm not looking for that. I'm not looking for, I just look for 20 pips. Perfect. 20 pips. Look for 5 of those a day, and you're at 100 pips. That's a scalper's mindset, but I'm not trying to make you guys like scalpers. If you guys want right now, just clean up your charts. Do this, and then let's just look at the overall what's going on. I'm getting rid of everything. I'm just going to leave. I'll show you what I'm leaving on the chart. Watch what I'm doing. I want you guys to just see the bigger picture. Okay, give me 2 more minutes. Please like and subscribe to the channel, guys. We'll have more education sessions like this, and I promise you guys will get sharp with your price action skills if you guys just join us on a daily basis, because you'll learn. Okay, so look now, after everything we just watched right now, this is where we're trading. So they're still protecting the lowest point of the day. We've got that heavy selling zone. Can we kind of maybe just manipulate this red box a little bit, bring it down to some bodies now? This is what I would do. If I'm going to continue to trade tonight, this is what I'm doing. Doing this. Okay? So you still see it's moving back up. So what could happen? Okay? We could literally break out. You guys know. Break out impulse, come back in, close, drop a little further. That could happen. Option 1. Option 2. We break and close above. We flip the red box green, catch a pullback, break out of there, and we're driving. That could happen. Another possibility is we just trade back down, just bounce off here, 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 here. That could be the bigger consolidated zone. Just going up and down, and that's scalper's paradise. See how it came down from red to green? Measure. Now you're measuring. Red to green. Distance from point A to point B. That is 150 pips. 150. Okay? That's literally a daily goal or more for some traders. Now look at the return coming back up. Blue, green zone, coming back up to red zone. Another 150 pips coming right back up. You don't have to catch that entire move. You could have caught 50 pips of that. You could have caught 50 pips of that, 100 pips of that. But right now, this is how the market is moving. Just bouncing like a ping pong. Going up here, slowly coming back down, going back up. But you got to watch now for breakouts or these type of moves. Down here. Will it come down, close, go green to red, start see this, then you're going to get breakdown to this yellow line. And then if it breaks down there, the yellow line support will turn to resistance. Then if it goes down, next yellow line. It could bounce there. When it comes up, again, that's why I have alerts at every single one of these lines. If it breaks out, I use that to buy off of. When I buy, I take it up to the purple line. And same shit. It just line to line. And then these zones just advance into the future. And all I do is just change the color according to the volume. That's it, guys. I don't know what you call this strategy. It's very simplistic. You know, anyone can do this. It doesn't require extensive knowledge. It's not that hard. It's not that difficult. It's just, you got to understand now, measuring these candles like are big. So these are average, like 100 pip candles. Holy shit, okay? Gold is insane. It's mind-boggling the volume. So, sorry, I didn't put that in the chat. One second. Oh, man. Okay, that's the IG of us at SST. Stock Sniper Trading, that @ add us, guys. And then this is mine. Sniper, this is for cash. Sniper Ronnie _FX. If anyone wants to add. But that's cash, please message me. And I'd like to link up with you to help you out with anything you need, because I appreciate you. Okay, guys, that's it for me. Tomorrow I'm going away, so I won't be at home. So I'm gonna go away till Sunday, and then I'll be back for the boot camp. But guys, I wish you guys an amazing Friday. Trade smart tomorrow. It's gonna be volatile again. End of the week. Market. The U.S. government just opened up. Please be careful trading. You don't want to do something silly and then start your weekend off like that. Trade smart. If you've hit your goals for the week, you're done. Wrap it up. Do some analysis. And we'll see you guys next week. Guys, thank you guys so much. I really appreciate it, guys. We learned a lot today. We talked about technicals, a little bit about psychology, a little bit about risk management. We talked about handling emotions, trading to a plan, how to do a top-down analysis, reading candlesticks, seeing fakeouts, learning clues, the FU candles. Anytime you get that moment where you see something and you say, no way, there's no way possible that could have happened, no way, then you're onto something. Anytime you question the market, that's when you're onto something. Yep. And you got it, Lavish, cut it. Right there, okay? When the price gets too high, we got to cut it, okay? Hold up. 1 second, guys. Don't leave me right now. We'll probably get a copyright strike, but who gives a shit? Wait. Hang on. You guys got to hear it. Or I'll show you what it is. So everybody knows what I'm talking about here. Okay, everyone, if you can, please listen to this song after the call. Right here. OT Genesis, Cut It, featuring Young Dolph. Right here. Okay? I'm not going to play it right now because we'll get caught up with a copyright. But you guys all listen to this. And you guys will know what I'm saying. When the price gets too high, we got to cut it. Right? You got to cut it. That's it. You can cut it in half, but to further advance it, don't just cut it. Find the POC. Cut it in half, right? Nice straight cut line. And then you go a little bit above, a little bit below, and then you got your zone. And you can work your way off of that zone. That's it, right? There you go. With this one, did anyone cut that? You cut it? Someone probably picked up that wick right there. You could have cut it, literally. Like, look. That's me. Guys, I smoke enough weed on a daily basis to know how to do this, right? If you guys can look at my eyes right now, I can still look at that, right? There's the cut. Where's your zone? Come on. We can teach our kids this. I'm going to get my daughter doing this where I don't have to trade anymore the rest of my life. She's going to take over. I'm telling you. I'm going to sit and watch the basketball game, and she's going to be taking over. Because she knows how to cut these candles. That's it. She can cut better than me. Okay, guys. Have a good night, everyone. Yeah, create the cut indicator. Maybe we should. But someone will probably do it and say that they invented it. It's all good. It's all good. We get people saying the FU candle all the time. I got a video 6 years ago on YouTube where I said it. No worries. If you guys want to say what we say, it's all good. We're all family here. I don't care. As long as you guys are learning, I don't give a shit. But I got a lot of other terms for other candles. Don't worry. But have fun, guys. There's the breakout candle of that high, okay? And did you guys notice anything about today's bullish daily open? It held. Look at it right there. That point of control of 6 p.m. Guys, it's like clockwork. So not only this, look at London. When you see London open up at 3 a.m., analyze London's candles. When you see Comex, analyze that. When you see Wall Street market open 9:30, analyze the first 15 minutes of these critical market opens. If it's NFP, FOMC, analyze the point of controls of those big body candles. And you could get so much more value than just gambling whether it's going to break out or this or that, or buying the highs or selling the lows. You'll be more profitable by waiting and trading at the cut it lines or at the zones. I promise you guys that. I'm putting my name on the line and SST, Stock Sniper Trading line. And Dave, we're putting our names to this. We will back this up and tell you it's a good probability of having success in the markets because we are living through it right now. I'm telling you guys, okay? So with that being said, did that candle close above? Yes. Go through the motions. Red to green zone. Have we pulled back into this? Not yet. So will it pull back? Yeah, it's going to pull back. When? Will it pull back right now or 5, 10, 15, 20, maybe 1 hour from? I don't know. But when it pulls back, there's probably going to be something that happens there. Something right there or like right in there. It could come right back up or it could close below, red, and it come back down. Where? Inside block. That one. Is this one going to hold? Not as much as the one below it. Like that one. That one's a pretty strong one. But this is the strongest one. The better buying, if you can be patient and you got to buy down here, you're doing better. You're deeper discounted than these guys or these guys. Okay? So you just got to understand where you position yourselves. This is where I use positional trading. If I'm looking to buy like right here, the first rate that, it's not my normal trading size. It's more of a feeler, testing out the market because that one can be easily faked out. If it comes a little deeper, I might increase my position into that block. If it comes into this one, I might increase it a little more. If it comes all the way down in here, that might be where I'm sitting with a standard position, waiting there patiently with all of the big daily buyers. I'm a scalper, but I would love to buy with the big boys. Why not, right? So that's how you got to position. And someone will say, well, Ron, I can't wait for it to come all the way down there. If that's what you say, I'm going to say, that's not my problem. If you can't literally wait for it to come down here, then trading is not for you. It's not for you. You have to be able to wait down here because that's what we call a high probable A+ setup down there. This is not an A+ setup. This is not A+. This is A+. Why? Because that was the opening day's balance and you see it's already been retested at the point of control and look at the results of it. So you don't think that there's more pending orders accumulating in that block right now as we're speaking? Yeah, that's how you got to think about trading. That's how you got to go about it. Those blocks you have blocked are called fair value, whatever you want to call them. I don't get like, guys, I don't want to get into this again. I don't give a shit what you call these blocks. You can call this Mickey Mouse zone. I don't care what you call it, okay? Fair value, Mickey Mouse, call it whatever you want. Just understand what's going on in there. That's all you got to know. I see traders today are just getting confused with what these zones are called and they're missing out on valuable trades because they're just figuring out what these names are called. I don't care what you call these, okay? But whatever you figure it out, just know the technical sides of what's going on in there. That will take you further. Tetris. Is that not the Tetris piece right there? You remember we talked about it? There's the Tetris piece right there. I'm telling you, there's a lot of people I know that are retired by trading this pattern on a daily basis. There's your big bull candle, your inside block, retest, point of control, your bullish ignited break, short wick pop. That is literally right there an easy 50 pips. That's a daily wage for some traders and they wait all day for these Tetris pieces. Okay? Play Tetris on the weekend. That's another homework assignment for everybody. If you can play Tetris. Here's the retest now. So if you wanted to FOMO buy up there, now why are you not buying down at the point of control? If you wanted to buy it, there was buyers that just bought up there. But now look at where you could put, you're getting a 50 pip discount from this buyer that just bought the highest of that wick. So you're getting a 50 pip discount where that trader who bought that high wick is now 50, 60 pips in drawdown, right? So if you wanted a pullback, now you got it. But now you got to kind of see if it's developing and how will it close. 20 seconds to go. Guys, and we're going into 9 p.m. in another minute, okay? So you see now the hourly could now switch momentum. This started from 8:30. Now it's ending at 9. Now we're getting a new 30-minute candle in the market. Analyze your 30-minute candles. Look at what they're doing. They came up, they pulled back, big bullish candle. Look at the 30-minute candle. Impulsively breakout, closed above. It's opening ignited right now, has a short wick to fill in the next 30 minutes, could possibly fill and take out that daily point of interest and continue driving into, I would be dissecting these bodies right over here. This was trading this morning at 10 a.m. Eastern, 11 noon before the US 30-year bond auction, and then that's when it dropped, okay? I could sit all night and go do this with you guys. There's going to be nights where we're going to go 5, 6, 7, 8 hours. If you allow me to educate, I can go all night with us. But if it's just buy, sell, buy, sell, buy, sell, we can do that, but we got to know the conditions. I love waiting for a trade to come to me and let it develop while breaking it down. That's where kind of I do my stuff, more my analysis. And I'd love to do that with you guys, but we need more time, and I just don't have the time to tonight, okay? And guys, there's a free Telegram link pinned at the top of YouTube for you guys. It's right over here. Everything is available for you guys. It's not just me here. There's Dave, Big Dave in the Zoom. We got everyone also in the Discord, guys. There's a lot of amazing traders. Put me to shame in this group. All in here, guys. All in here. This is not my profits. These are Crippy. This man is killing it. Forex Borix, as usual, is killing it in here. Everybody in here. Everybody. Chris. All you guys. King Gemini. Everybody. Just trading together as a team. It's unbelievable to watch, guys. It's a great community. And homework is listen to this track. And you'll know why Ron says always, when prices get too high, we cut it. Okay, guys. Have a good night. Thank you, guys. Thanks for subscribing. We appreciate you guys. We're on our way, rolling to 100,000. That psychological level, we're going to get there. Where you see we're moving all-time highs here at SST. We're in an uptrend. We're very bullish right now. Let's keep this momentum, because I hope we don't get a big fuck you candle on YouTube. So those are all those copyright claims on YouTube. I hope that we can still keep it going, okay? Have a good weekend, everyone. Bless everyone. I hope you guys learned something from tonight. Review tonight's session if you can. I'm sure you'll learn something, and there's a few nuggets in here for everybody. Have a good night, guys. Thank you so much. Thank you. Like and subscribe to the channel. And also, go to our website and look at the free blogs. There's a lot, guys. There's a lot of good. There's a lot. We were just talking about point of controls. You want a blog on point of controls? Right there, guys. Right there. There's the breakdown for you. What we just did tonight. It's in a 5-minute blog for you guys. That's why I identify those points of control. This is called delta volume. This is called your footprint charts. That's where the majority of action happens. So get to know your blogs, guys. There's so many in here. You'll find a blog on anything in trading. Okay? Thank you, guys. Enjoy the rest of your night, and we'll see you guys next week. Have a good night, guys. Enjoy trading tomorrow. Please trade smart on Friday. Again, if you reach goal, please be friends with me. Okay? Don't make this into a casino. Thank you, guys. Have a good weekend. It's a good session for me.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay?
I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.